all the chapters theory. It'll be a resume of everything that you've heard, that hopefully you've heard before. I hope you've heard it up until now. But if not, hi. You have an exam on Sunday. And then tomorrow we're going to do problem solving all day long. So even though I made that adjustment at the last minute, I've been getting emails about it because I have been trying to tell people. But anyway, there it is. So today is going to be all theory. I'm sorry if you post it. The next thing is that JMAC is filming today. And I don't know if people already know this, but if you go online and you go to YouTube and you pop in JMAC 305 tutorial, a video of me pops up doing this. But the problem was that when we filmed it last semester, the video camera died in the middle of the filming, and so chapter 4 is missing. So this is why they are attempting a second try, even though our venue is obviously much more disgusting than the last time. So we're going to give it a try again. The big thing that I want you guys to know about it is if you're sitting anywhere near the camera, all of your chatting is going to be recorded and be put on YouTube. So, you know, like, don't talk about, like, the bank robbery that you're planning on doing, or, like, the person that you're stepping out with, and how, like, your girlfriend's so stupid for not knowing or anything. And, like, that shit is not, like, it's gonna, so, like, beyond that, just try not to talk too much if you're sitting in that area, because it's gonna be recorded, okay? And also, just for everything, I really encourage you today, like, today in particular, if you are not clear about concepts, please ask me questions. Like, ask as many questions as you want, and don't even worry about the video camera. Like, I'm telling you so that you know that it will be recorded, but, like, no one's going to know it's you. Please don't be discouraged from asking questions, because this is going to be your last time to really ask me these things. Take whatever you want. Because of the videotaping and stuff, I'm going to try and contain all my writing to this board and, like, a little bit of this. If you guys are screwed, maybe, like, adjust or something, because I'm primarily going to write here and there. Okay? So, I think that's all of my housekeeping. No, I have one more housekeeping thing, which is next week, I'm replacing Mateo for ACO 340. He's not in town, and so he has his 340 tutorials from noon until 1:15, I believe. And he can't do it, so I'm going to do it for him, which means that usually I start this at 1:15, but there's no one in this room after us, so I'm pushing it 15 minutes. So next week I'm going to start at 1:30 so that I can help out my friend. Okay? That's all in my housekeeping. I hope you're still around next week. Yes, hey? This deadline? None of you are disking. We're getting through this together. It's like my rally call, like. And I'm feeling a bit like, I mean, I'm always like this, like you guys know me by now. But I'm feeling a little bit kooky and wacky because I'm a little bit emotional about it because I'm graduating, so this is like my last kick of the cat. I'm doing this for you guys. So thank God you did it this semester and not next, okay? Okay, next semester you have to pay for it when I work for a company. Okay, so now we're going to start. JMAC, please erase everything except for like when you edit. This is where we start. So welcome everybody to the 305 platform. For anybody here, this is the first time you see my face. Honest? Really? That's it? All of you are my friends already? Okay. My name is Laura, and please feel free to ask as we go along. Okay? So here we go. Chapter 1. Chapter 1, you don't have a lot of stuff that you really need to worry about in Chapter 1 theory-wise. The only stuff is really going to show up on MCQs, and that basically has to do with what is financial accounting and what is managerial accounting. And he always throws in a couple MCQs about that. is that financial accounting is the accounting that we do for the financial statements that we present to the world. So that's making our balance sheet, our income statement, our cash flows, and our changes in equity. Okay? So all of that accounting, there are 4 reports that the outside world uses. What we report to the exterior world. Okay? Right? For those of you who just came in, there's 2 chairs that are kind of like chilling back here. You can find them. And there's chairs up in the lobby that you can steal and bring down with like tables. We're just going to move everything. So, no matter what the multiple choice he throws at you, just think about the nature of the difference between that sort of reporting for the external world and the kind of things that we're doing, which is all about what happens inside your business. Managerial accounting is all stuff that you do inside your business. It's about you as business people. How are you going to make decisions for what goes on in your company? So all the reports that you produce as a managerial accountant, they stay inside your business. Like what happens in Fight Club stays in Fight Club, right? Like it's all internal. And because of that, there's not really any rules. There's no externally mandated rules. The way in which when you make financial statements, an auditor comes in and checks all of your stuff, and then if they find that something is, materially misstated, they ask you to change it. You have to conform to the rules, especially if you're a public company. All this stuff, you're subject to all these kind of external bodies and verification. None of that is true for managerial accounting. That's why a lot of the forms and all of the kind of reports, sometimes in different exams and different books, you'll see them that they look slightly different. And it's because people do them slightly differently, right? What you learn in this class is a series of best practices. And just remember that managerial accounting is way more flexible. So any MCQs, just keep that in mind, that big difference between external for the outside world, has to follow outside rules, outside verification, versus an internal system that's for you and your business for decision making. No external rules are applied to you, and it's all about reporting on specific sub-segments of your business. And that's chapter 1. Okay? Chapter 2 is where we really start to get into the meat of things, like what is going on. And the big thing in chapter 2 is understanding the global view of what we're doing. And Comm 305, managerial accounting is like this huge, huge thing. And Comm 305 focuses, especially pre-midterm, on cost accounting. Okay? Chapter 2, 3, 4, and 5 all deal with issues around cost accounting. And that basically means, how do we figure out the cost of the thing that we make? And that's really important, because if I don't know what it costs me to make something, how do I know what to sell it for? How do I know how much money I need? And this has to be extremely precise. So let's look at all of the money that we spend in our business in order to make money. Okay? So you have all your costs in your business. Every penny that you spend, okay? For absolutely everything, from paper clips to your raw materials. Now, as accountants, we like to categorize costs. We come up with systems for keeping track of all this money that we spend. So the first division that we make, the first sort of way in which we categorize these costs, is how do we spend them? Do we spend them making the product? Or do we not spend them making the product, which we call these costs period expenses? Sometimes these are called selling and admin. product costs. Sometimes these are called manufacturing costs. Basically, this is all of the money that I spend doing whatever productive thing it is that I do to make money. And in 305, mostly we're talking about like manufacturing, like we're making something to sell. And in this case, we're saying everything that happens around making your product, those costs are going to become the value of the thing that you make. That's what happens. Every penny that you spend directly to make an object becomes the value of the object that you have made. Okay? Essentially, what it means is these costs, the money that I spend at my factory, all of it becomes the value of the product. I.e., it's the cost of it becomes your inventory cost. It's as if it's amortized to that object. Okay? So that means all the money that I spent making this sweater. Okay? So that means the fabric, the dye, the buttons, the thread, the labor of the people who sewed it, and also all of those other costs like the electricity and the heat and the taxes and the rent paid on the place where this was made, the janitor who swept up after everything, the supervisor, the person who did quality control. I don't know what quality control sweater is. I just tried it on. It's not and then all of that becomes the cost to make this sweater. Okay? So the money transforms into the object. Now, period expenses are treated entirely different. So these are all the things that happen outside of my factory. They're either at your office or wherever it is that you sell your product, right? So this is stuff like your secretaries, your executives, your accountants, your IT people, your HR people, your PR people, your marketing people, your salesmen, all of that other stuff that is necessary for you to run your business, but it isn't making the thing that you sell. Okay? It's all the other stuff that you need to do in the modern world to run a business. These selling and administrative expenses, they do not become, we don't attach them to the value of these objects, right? We expense them in the period in which they are incurred. So, if you want to think of it in simplistic terms, these attach to the thing, these attach to the time.
So, if we got a multiple choice question that said the value of the product is the product
That would come. And when I say, like, people sometimes get confused as well, because when you sell your object, that's how you make money, right? Like, as a business, you sell something, a good, service. What you sell it for, the price, that price has to recover the cost of making the object, and also the period expenses that you generally incur, right? So the price that you charge for an object has to cover all of the money that you spend. So don't let that confuse you. When I say that the value of the object to you is only the product costs, this is the value at which I'm going to cost my units. If I make these sweaters, and I make 10,000 of them a day, they're going to sit on my balance sheet in my inventory until the day that I sell them. And the question is, at what value do these sit on my balance sheet? And the answer is, they are the value of all of the costs that it took me specifically to make them, of their product costs. The period expenses are not included in that value at which they sit in my inventory. Okay? Yes, I have to recover these costs when I sell these objects, but these objects themselves, as they are valued in my inventory, are valued at the cost of the product costs that I incurred to make them. Okay? So then how does this work in accounting? When I make these objects, when I spend this money and I make these objects and the value becomes the object itself, that is the value of my inventory. And inventory is a permanent account. It's a real account, and it lives on my balance sheet. So if I don't sell this sweater in the same period in which I make it, it goes and sits on my balance sheet as an asset. It's something that I own. Anybody got a seat next to them? Anybody hand up? There's one right here. So it sits on my balance sheet. These period expenses, these are expense. This is an important idea. They're expense in the period in which they're incurred. That means that I essentially just put it through my income statement in the period in which it's incurred. I have salary to my secretaries, and I have selling expenses, I have all this stuff. It just goes straight through my income statement when I spend it. Any account that is an expense account, it's not a real or permanent account. We call these temporary accounts, right? They zero out at the end of every period. This is like ringing some 217 bells for some of you, and maybe for some of you it's like ringing alarm bells, like you don't remember what I'm talking about. But an expense account zeroes out at the end of the period.
What do you mean exactly by amortize?
Amortize just means that amortize is just like a fancy word, meaning that it's, when I spend the money doing this, I don't expense it, it becomes an asset to me. There's the difference between expensing and capitalizing something or amortizing something essentially is like the difference between it's just money that it's like something that I spend and I consume in one period, it goes straight through my income statement, versus something where I spend money and that's now something that I own, that moves through time with me. It's the same way as when I acquire a building, I don't expense a building because I own that thing now. I was about to swear. I own that thing now, but you video camera. I own that thing now. So that's why it becomes something that I own, right? I mean, it's the difference between, like if you think of your own personal wealth. When you go out and you buy lunch, you're not like, I own this lunch now. It is like part of my wealth as a human, you know what I mean? No, you eat it, you consume it. It's expense, it's part of just living, right? But when you buy your home, you're like, this is my wealth, my house, you know what I mean? That's the difference between what I do with product costs and what I do with period expenses. This is just something I spend, and it goes through my income statement in the period in which it's incurred. Okay? I know we're spending a lot of time on this, but I really feel like it's important that you understand, like this is your foundation. If you don't have a good foundation, it gets a lot harder later on when you get to the complex ideas that are built on this.
So just for like an example for shipping for other projects, would it be a period cost? A shipping expense would probably be like a selling expense, because it's after that thing was made, right? Because when I make that thing and then it goes into my inventory, it goes in at a value.
And the shipping might happen like much later than that, right? But say the shipping that I paid to get my raw materials to my factory, that would be a cost of production. So that would become the value of the units, right? Because then that's the value of getting that raw material, and then I use that raw material to make my thing. So shipping final product, period expense, shipping to get your material that you use to make your final product, that goes into the period cost. All of it comes down to think about what you're spending the money for. Are you spending the money to necessarily make the object, or are you spending it to do all your other business stuff, including selling that object? Those things are period expenses. Now, here's the part where my inventory will eventually show up on my income statement, which is, I make a thing, it becomes a thing that I own, it sits in my inventory, which I keep track of on my balance sheet until the day that I sell it. The day that I sell it, it becomes my cost of goods sold, which goes on to my income statement. Because in the period in which I sell this thing, that's the moment where this object makes me money. In the whole time, it could sit in my inventory for years, doing nothing for me. But the period in which I sell it, it made me revenue, right? And when I report my revenue, I have my sales minus my cost of goods sold. So minus the cost to me of making that thing that I sold. And that gives me my gross profit. From my gross profit, I subtract my period expenses, so all these expenses that were incurred in the time period of this income statement, that gives me my net income. So your product costs do eventually, hopefully, end up on your income statement. I mean, if you have a successful business, hopefully you're selling the thing you make, right? If they don't end up showing up there, then you are going to go out of business very, very quickly. Okay? So let's talk about these product costs some more, because really this entire class focuses primarily on this. How do we do this? Okay? So the basic concept is everything I spend to make a unit becomes the value of that unit. Now the deeper, kind of more specific question is, how do I actually figure out my cost per unit? So the basic equation is that your total cost is equal to the direct materials that you put into that unit, the direct labor incurred to make that unit, and the manufacturing overhead used to make that unit. So pretty much all of chapter 3 and 4 is about how do I figure out this equation and the different ways in which you can do that. Okay? So let's look at the individual elements. First, direct materials. Now, direct materials, these are the raw materials that go into making a unit, which are easily measured and easily traceable. It's the same thing for direct labor. This is the labor that goes into making this unit, which are easily measurable and traceable. Gentlemen, I think there are chairs outside up the top, and you can bring them down.
Sounds good.
In the back.
All right.
So that's the nature of direct costs. They are traced to the object. When I say the object, I mean whatever it is that you're making, right? So these two costs are really kind of the easy ones, right? Those are the things that people can see very clearly what it costs them to make something. Because I can just measure all of this and say, I paid $1 per meter of this, and 2 meters went into making it. Therefore, the money I spent on materials was $2. Easy. I can watch the person making the sweater, the person who actually touches the product, or the multiple people, let's be real, it's never one person, who make this thing, and I can measure the time that they spent on it. And then I know how much I paid that person per hour. So these are very, very easy. Okay? The one that is difficult is this. Manufacturing overhead. Because manufacturing overhead is very simply everything else. Right? It's kind of like, oh, we know these two ones that are easy, direct materials and direct labor, and then they're like, and then absolutely everything else possible. Right? So manufacturing overhead is all indirect costs. Okay? All the costs that are indirect. Now this can be a bunch of different things. This is your rent, your electricity, your utilities, your taxes, your insurance. But in that there is also materials and labor. Because not all materials that you use to make your items are easily measured and traced to the object. The same thing with labor. Not all labor, like not all the workers that you pay, work touching the object, right? I have some workers in my factory who do things like repairs or maintenance, or they're janitorial, or maybe they're supervisors, or maybe they do quality inspections. All of these people, they don't necessarily touch the objects all the time, right? Like they might come into contact with certain units, but they don't really work on the units per se. So they don't have a direct connection with the objects, but their labor still contributed towards bringing these objects into being, and therefore, their product costs. They're just indirect labor. Same thing with material. Indirect material are those materials which are almost so small or so residual that they're not impossible to measure, but it's not worth measuring them. It's like saying, like if you're making a table. I make furniture. I can measure the wood. I can know how many nails I put into and screws I put into that table to put it together, right? But how could I measure the amount of sandpaper I used to make this table versus making that table, right? I mean, if I really wanted to, I could like maybe weigh the sandpaper before, and then you know how you use sandpaper and then it rubs down, and then weigh it afterwards, and then do some kind of algebra. But why would I do that? Because sandpaper is like 5 cents, right? It's so difficult to measure and trace to specific objects that it's not worth it for you to do so. So something like sandpaper, or maybe oil to run your machines, or the dye that went into dyeing this sweater, those materials are so not easily traced that it's not worth it. And therefore, they're categorized as indirect materials, and they're lumped in with all the other kind of like, it's like the island of throwaway toys, you know what I mean? Like, it's all the stuff that is like more difficult to deal with, okay? Does everyone understand the idea of all these things? Go for it.
if we can clearly measure, like how do we calculate a certain cost, it's DF or DL. And if it's hard to calculate it, it's MOH.
Pretty much. I mean, essentially, it breaks down to either it's direct materials, easily measured and traced, direct labor, people who actually work on the objects, and if it's not one of those two things, then it's MOH. And this is all within the concept of, remember that when I'm talking about this, I'm only talking about stuff that happens at my factory. If they say to you something like rent at my office, or depreciation on my salesman's computers, that's a period expense. That does not belong in my MOH. This MOH, stands for overhead, but the M stands for manufacturing, right? So this is only the indirect costs related to manufacturing. People get confused because period expenses, they also have overhead, right? But they're period expenses. There was a question in the center? No, it's at the factory, therefore it's manufacturing overhead. Everything that takes place at my factory is a period expense because I need that manager to make my units. He works on making my units, even if he doesn't touch them, he's indirect labor. I know it sounds weird. You can show me the exam and we can look at it if you can find the exact example, but a supervisor at your factory should be indirect labor and manufacturing overhead. But is it a manager at your factory or is it a manager, like, if you can find me the exam and show me the example, I can either look at it and be surprised or I will be wrong. There was another question. Or I made that up. There's no other question. Okay. Now, so one other kind of thing to keep in mind, and this is a vocabulary thing that you just need to memorize right now, is sometimes you're going to hear them use the words prime costs and conversion costs. These two things together are called prime costs. These two things together are called conversion costs. It's just a category. If you get a Chapter 2 question on your exam, because your exam is very likely going to be MCQs, a Chapter 3, 4, 5, and 6 question. That is absolutely, you are going to have that on your exam. Every once in a while, some exams also have a Chapter 2 question. And the Chapter 2 question is usually, the purpose is to make a cost of goods manufacturing schedule if you get it. And often in Chapter 2 questions, they will try to trick you into doing this. They're going to try to trick you into doing this calculation. But why is this calculation wrong? Because I'm double counting my direct labor. My direct labor is in both prime and conversion costs. So you can't just add your prime cost to your conversion cost to get your total cost, okay? They sometimes try and trick you into doing that in like an MCQ or a Chapter 2 question. And these definitions are really important, especially in Chapter 4, where they're constantly talking to you about conversion costs, right? Okay. Now, all that I've been talking to you about based on accounting principles. This division between product and period. Okay, it's how we categorize it based on what I spend the money on. What do I spend the money on? Do I spend it on making the product? Product cost. Do I spend it on everything else? Period expense. But there's another important way to categorize costs and divide them that you need to understand, and that is dividing them based on their cost behavior. Another amount. It's like saying, for each sweater, it costs me $2 $2 in fabric. So if I make 10 sweaters and each costs me $2, then in total I'm going to spend 20 bucks. If I make 100 sweaters, then my total cost is going to be much greater. It's going to be $200. But if I look at each individual sweater, they always cost me $2. So the rule for variable costs is that the per unit cost stays the same, it's stable. But the total cost changes depending on V, i.e. how many units you make. So if I make 10 units, it costs me 20. If I make 100, it costs me 200. So variable costs change with the number of units that I make, but on a per unit level, it always costs me $2 to make my stuff. Direct materials and direct labor are variable costs, right? They're always variable costs. Direct labor and direct material are always variable costs. Fixed behave in exactly the opposite manner. No matter what number of units I make, this cost is in total always going to be the same. So a really good example of this is like your rent, right? If my rent is $1,000 a month for my factory, it does not matter how many units I make in that factory during that month, my rent is always $1,000. My landlord doesn't care what I do in that space. He only wants his $1,000 on the first day of every month. Now what this means is that if in the month I'm able to make, let's say 1,000 units, then at 1,000 units, my total cost is 1,000 divided by the 1,000 units I make means that my unit cost is $1. Every single unit costs me $1 of rent. If I jack up the amount of units that I make to 2,000, well, my total stays the same. I still only have to pay $1,000 of rent. But now I'm dividing that $1,000 over more units, which means that each unit is only costing me 50 cents of rent. So notice that their behavior is exactly opposite. Whereas here, the cost per unit stays the same, and the total cost changes depending on fee. Here, the total cost stays the same, and the per unit cost changes depending on V. The per unit cost will decrease the more units I make and will increase the less units I make. Okay? This becomes incredibly important in the second half of semester. Okay? But this is still important. This is very important for chapter 6, but it becomes ridiculously important in second half, understanding this behavior.
They talked a lot about this. They emphasize the importance of this. In past midterms, I see like long questions.
Well, no, because this is the kind of stuff that's like, did you ever take a spelling test where they ask you to write down the whole alphabet? That's what this is like. You know what I mean? Like, this is the alphabet. He's never going to ask you to just write all the alphabet out. He's going to ask you to spell words. You know what I mean? This is foundational stuff. That this is the kind of intrinsic stuff where people will look at questions and they'll be like, I don't understand what I have to do. And it's because it's the same way that, like, I look at my computer and it does amazing things. I don't know what's happening inside that machine. You know what I mean? But I've met people who like can read like binary. You know what I mean? That's the difference. Understanding this, you understand the basics of what's going on. This will come back to bite you at some point in the semester with the high-low method. Like the high-low, there many, many times you will have to figure out some way to take a cost which is mixed, because this is entirely possible. You may have a cost that is mixed, which looks like this. So it kind of looks like a variable cost, except my intercept is not 0. And this cost is a combination between a variable portion and a fixed portion. See, here's my fixed portion, and this portion is my variable piece. Okay? This is important because MOH is a mixed cost. Okay? Some elements in MOH behave like this, like indirect materials, indirect labor, and some elements in MOH behave like this, like your rent, okay, and your depreciation. When you combine them together, you get a line, a graph that looks like this. And the reason why this, like when I teach it to people and I start talking about how do we figure out the slope of the line, high-low method, people are like they don't care at all. And I'm telling you, it comes back at you because somewhere in this semester, you are going to have to take manufacturing overhead and you're going to have to pull it apart and find out what portion of it is variable and what portion of it is fixed. And there's a lot of ways that you can do it, depending on what information he gives you in the question. But the method that they teach pre-midterm is the high-low method, which essentially you learned in high school. It's just figuring out the equation of the line. Y is equal to mx plus b, right? M is your slope, i.e. your variable cost per unit, and b is your intercept, which is your total fixed cost. Okay? So very quickly, I'm going to go over this. And you know what? Don't snooze through this, because last semester, this is the thing that hurt people. They had to use high-low method to figure out their Chapter 6 question. And nobody, well, not nobody, I don't want to be mean, but a lot of people didn't catch that that's what you had to do, and then they couldn't answer the question at all. Okay, high-low method is super, super, super easy. Here's how it goes. They will give you 2 points on the line. So anytime that you see a question where they give you essentially a pair of two, like x's and y's. What I mean by that is your x is how many units you make, and your y is how much money you spend. So if they give you, if they say something like, when they made 10,000 units, they spent $70,000, and when they made 30,000 units, they spent $82,000. This is 2 coordinates, and I can use these 2 to figure out the slope of this line. And it really simply is just, if you remember this from high school, rise over run. How much does it increase in my y over how much does it increase in my x? So rise over run, which, if it's easier to remember, it's the change in your y over the change in your x, okay? This is to find your slope, which is your m, which is your variable cost per unit, okay? So in this case, my change in my x is my y is 82,000 minus 70,000. Someone get out a calculator because you're going to have to do this for me, because I'm making up numbers. My change in my y is, I go 10,000 to 30,000. Someone got this for me? 0.6. This is my variable cost per unit. This means that I spend 60 cents per unit. This is my slope. So now I know that I have y is equal to 0.6x. Now I just have to find my b. I have to find my intercept, which is my total fixed cost. Okay? So to do this, you basically, all you need to do is choose one of these points and plug it into the equation, right? You have, so to find your fixed cost, plug one of the coordinates, or one of the pairs, into the equation that you figured out. So right now, I know that y is equal to 0.6x plus b. So I just pick, let's say, this one. I'll pick this x and its corresponding y. So 70,000 is equal to 0.6 multiplied by 10,000 plus b, and just solve this equation for b.
64.
That's it. If you want to verify your answer, do it a second time with the other set of coordinates. Someone figure out what b is?
64,000.
64,000. So that means this number right here. So my fixed costs are $64,000, and my variable cost is 60 cents per unit. Okay? That is true. If he actually does hit you with a traditional, like straight up high-low method question, you can then use this equation that you've come up with. So the equation that you have figured out here is y is equal to 0.6x plus 64,000. The idea is that I can now use this equation to predict what my total cost will be at any point of production. So I can say, oh, if I wanted to make 20,000 units, how much would it cost me? Plug in 20,000 units here, and it'll tell me how much my it'll predict how much my total cost would be. This formula is useful for that, but the caveat is that this formula can only be used to predict the total cost within the relevant range, which is between 10,000 units and 30,000 units. If he were to ask you to predict the total cost at 40,000 units, you will answer on the exam. I doubt he's going to ask you this, but if he does, it's a gift. It's a gift. And you are going to say, I cannot answer the question because it is outside of the relevant range. This formula is only true between here and here, because these are the limits that I use to calculate it. Okay?
Is that the only thing you might ask about your relevant range?
That's chapter 2. Sometimes it's chapter
I mean,
do the high note on your CVP.
I've been teaching this for 7 semesters, and I really, as yet, have not been able to read his mind. And so I don't know, but I think so. Like, I got sick. This is so stupid. I got sick earlier this week where I got hurt in my eye, and I was joking that maybe there was a benefit to my eye injury where I would be like Spider-Man, and it would like, my injury would transform my eye, and I would be able to like see into people's souls and like see the future, but it hasn't happened yet, so I don't know.
I want to ask you though, you said the range is from 10,000 to 30,000, but we have the intercept, so we know what's the intercept, so it can be from 0 to 30?
No, because I don't know what happens to my variable costs from here. As far as I know, like, because basically, in reality, like, if we're gonna go like deep math, you know what I mean? Like, this is my version of deep math, is like the equation of a line. You know what I mean? Oh my god. So embarrassing. Mathematicians are so hot. I hope none of them ever watch this video right now, okay? So I wouldn't actually have a line like this. What I really have for data is a point here and a point here. And what I'm doing is I'm making the assumption that it's straight between them. But as far as I know, stuff should like, like it's doing whatever. You know what I mean? Like, so I can't really predict what's going on here or here, because my assumption is that I'm just plotting a straight line between the only two data points that I have.
Well, unless I recalculate this square.
Unless you recalculate what? Listen, you know what? All this, he doesn't care.
Okay.
Like, don't, if he asks you below this, no answer. If he asks you above this, no answer. But I feel like maybe you have a deep inner yearning for mathematics. That's what my eye is thinking about you. So it's true, it's happening. I'm transformed.
So just to get the trick, let's say if we had the same example, but he gave us the measures from like from let's say volume 0 to the maximum we have on the line. There would be no relevant range. We'd be calculating everything on all the data we have, right?
Yeah, but he's not going to give you like a data point at infinity. So it is going to be from 0 to some point, and that's going to be a relevant range. But listen, I'm feeling that you guys have been traumatized by midterms. And I know this is your last exam, and you feel like teachers have been screwing with you, and now you're all cagey. I can feel the room is cagey. Like, don't freak out about this high-low method stuff, okay? Like, it's going to be all right. And like, the relevant range is from the point that he gives you to the point that he gives you. He's not going to start asking you like deep theoretical questions like, you know, about like what could possibly happen outside that range, or what if the top range was infinity. Like, it's not going to happen. If he asks you a question that involves this, it's just a tool that you're going to need to use to figure out a CVP question. He's probably not going to give you a straight-up high-low method question, in which case he'll never ask you that relevant range. If it comes up in an MCQ, you just can't predict outside the relevant range. That's the end of the question. He's not going to get like all beautiful mind on you on this, okay? So you're going to be okay. Time is going to pass. You're going to do your exam on Sunday, and then you're going to like go home and eat and do other stuff, and life will go on. So everybody, like, phew. Don't worry, we're okay. So that's chapter 2. Let's start doing chapter 3. And if he asks you about if he does ask you one of these questions on the exam, and you think back at me right now and you curse me, I'm really sorry. I'm really sorry. Okay. So chapter 3 and 4 is when we actually start to do figuring out this equation. We actually start figuring out our total cost and the total cost per unit. Okay? Now chapter 3 and 4, just to give you an overview of what we're going to talk about, there's kind of two major methods for costing that we learn about in 305. One is job order costing, and the other is process costing. Job order costing, which is chapter 3, is used for businesses where the products that they make are unique individual products where I can't make it until I get my client's order because I'm doing custom stuff. It's things like a tailor that makes custom suits, right? The tailor can't make the suit until the client comes in and chooses their style and their fabric, and you take their measurements. And then you make that suit for that person. And another person might come in and order a different suit of a different style, and they'll be a totally different size. And I have to cost those two jobs individually because what this person wants and what this person wants will result in vastly different costs. Maybe this guy chooses premium fabrics and he's like enormous. He's like 7 foot and 300 pounds. And this guy is like 120 pounds and like bargain hunting, and it's all polyester, you know? So those two things are going to be very different costs for me, and I can't just take an average. I have to know exactly what I spend on him and what I spend on him because all my stuff is different. So this could be anything, and this might be individual objects, but it could also be batches. It can be something like I'm a printer, and I print magazines, right? I print Vogue, I print Elle, I print Chatelaine. I can't print the magazine until they send me all of the things that go on all of the pages, and then they tell, you know, and every magazine is a different size and number of pages and quality of paper and a different number of copies that they want. So each of those jobs is going to be a different batch, okay? So in job order costing, I have to cost every job individually. So I'm costing each unique job. So in this, the big thing to remember is this chapter is really teaching you about the flow of costs. So the flow of costs, it follows the object. As in, all the way through the production, I pay attention, like the guy with the 7-foot guy suit, I call that job number 101. I pay attention to everything that I do to that guy's suit from the beginning to the end. The other guy, job number 102, I pay attention to everything I spend on that job all the way through. And at the end, I have job cost sheets where I've kept track of everything I spent on each and every job. Process costing, so this is chapter 3. Process costing, which is chapter 4, is mass production. The total opposite. It's when I make 1 million of exactly the same thing over and over and over again. I make Pepsi, I make Coca-Cola, I make MacBooks, I make this sweater, let's be real, as if there's someone who really cared when she was making my sweater. She's like, Laura, which I do. So for process costing, it doesn't make sense for me to follow every single object so carefully, because to be honest, this takes a lot of effort, right? To follow each and every single job. In process costing, there's no need because everything I make is exactly the same. So I can actually do something that's really simple, which is I just take all costs this period. So this is the fundamental overview of how these two are different. In this one, I follow each and every unique job. In this one, I'm just essentially looking for what money did I spend divided by how many units did I make. Of course, these are way more complicated, especially this one with my equivalent units, but we're going to get to that. But I want you guys to see the big overview. So let's focus in on job order. So your job order costing, the really key thing that you need to know about this, or that you need to develop, is an understanding of how costs flow through the manufacturing process. Okay? So through tutoring, I've come up with this diagram that is not in your book, that I use all the time to explain this, and I feel that it is very helpful. Okay, here we go. So we have, our costs come from a couple of different places. Okay, so we have our raw materials inventory. Okay. My raw materials inventory, this is basically, I buy raw materials which I intend to turn into my finished product. While they're waiting, they live in my raw materials inventory, right? So they can possibly give me like a beginning balance, purchases, ending balance, all that, right? So this is one inventory account. Now, when I take something out of my raw materials inventory, what basically happens is someone goes to the inventory, to the storehouse, whatever it is, the warehouse, and they say, I need this and this and this for job number 100, and I need this and this and this for job number 102. And they submit 2 requisition forms. A requisition is basically just a piece of paper that gives them a paper trail that they took something out of the raw materials inventory in order to use it on a particular job. Okay, so if you see the word requisition, it just means what came out of the raw materials inventory. Now, what I take out of the raw materials inventory can go one of 2 places. My raw materials, that which ends up being easily measured and traced to my object, so the direct, I guess I'll use this color. So the direct materials, okay, they go directly into my WIP account, my work in process inventory, okay? WIP is kind of like the mixing bowl of your company, right? WIP is the inventory account where all the pieces come together and you make your units. WIP is where everything that you have spent so far on making your units, that's where it all goes in and it mixes together and out comes finished goods. But while those units are in process, they live in your work in process. Some units will take more than 1 period to make, so they might be in your beginning ending inventory, but it's kind of like where all the magic happens. It's where everything comes together. Okay? Now, certain materials will come out of your raw materials inventory which are not easily measured or traced, and those are my indirect materials. My indirect materials, because I can't easily measure or trace them, I can't just dump them straight into WIP, because I don't know what jobs they're for, right? These accumulate in my MOH account. money that's accumulated there and I assign it. Those workers that worked directly on units where I can trace their labor because I have timesheets that tell me I worked on this job this many hours, this job this many hours, this job that many hours. All of that is direct, and I can directly assign it. All the other workers whose labor is indirect, it has to go through MOH first. It gets put into MOH and it hangs out there as kind of like, it's like a detour. Any costs that are indirect have to detour through MOH before they end up in WIP. Okay? Now, it's important to understand that when I'm assigning these two direct costs, the WIP account is kind of like, think about it as like files on your computer, right? You have a folder in your computer called Documents. And then inside Documents, you have folders that say schoolwork, pictures, something else, porno, whatever it is that you have in there. I don't know, no judgment. Do you know what I mean? Like, but you have things. Those subfolders, you go into them and they have subfolders, right? In accounting, we do something similar, except not as exciting as porno, but it's, you know, I forget that the video camera is in the room and then I start talking like me and then I remember. But if you meet me for like 5 minutes, it's like you're going to know anyway. So the WIP account is like what we call a general account. So there's the WIP account where I can see, everything in WIP together is $10,000. And then the WIP has a subledger where each and every job that is active is in there. Like, I know that inside this WIP, there's job number 100, 101, 102, 103. And I know that those jobs have accumulated this much DM and this much DL. So it's like in your computer, you have your big account that tells you the grand total of everything that's inside it. But inside it, you have the little subtotals where everything is organized. And this is important because people seem to get confused on the exam when they ask things like, what's the ending balance of WIP? And the key to that is saying, well, the ending balance of the WIP control account, the grand total, is the total of all the jobs that are in that account at that moment. So if you can figure out what accounts are in your ending WIP and cost each of those individual accounts, then the total that's in WIP is the total of all those jobs. Okay? So that's a control account, the WIP, and in it is all the little jobs that are active. Okay? Does that make sense to people? Where am I going? Oh yeah, now we have to deal with our MOH. Now here's the problem of our MOH, which is these two I can easily directly assign. I know it, I have requisition orders and I have time cards that tell me what direct labor and what direct materials were used. But now I have all this MOH, and this MOH is my indirect labor, my indirect materials, and then a bunch of other stuff that has gone in there. Rent, insurance, all this kind of stuff. Costs that I'm having to pay. And it's all accumulating in this account. But here's the fundamental problem of MOH. Is that it's a total hot mess of really different things. Some of the things that accumulate in MOH, they're accumulating kind of like for every unit, right? accumulating maybe every week, maybe every month, like rent. Some of it maybe every quarter, like taxes. Some of it maybe only every year, like depreciation. So I have this huge bundle of costs that gather in this account. And the problem is, I need to somehow figure out how much this sweater needs to bear of that overall MOH, which is a grouping of things that is very unwieldy, and at any one moment, I don't really know what the yearly costs are going to be, what the weekly costs, like there's so much unsureness about what those costs are going to be. But I have to find a way, a functional way, where every day I can take a good guess at how much MOH this item needs to bear so that I can come up with a price for my customer. Because functionally, I need to go about my business. So for this reason, and also because I don't have any like really direct connection between, let's say, my janitor sweeping the floor and this sweater, I have to come up with another system for figuring that out, because how am I supposed to say that this janitor's salary went this much to this object, and that much to that object, and that much to that object, right? How do I proportionally divide it amongst all of my units? And this is particularly important in something like job order costing, where I might have some jobs that are very small, and some jobs that are very big. So imagine I have somebody who comes in, and I make custom furniture, and they want me to make them a coffee table. And then I have someone else who comes in and they want me to make them like a full bedroom set, right? If I approach my MOH by just saying, you know what, I'm just going to take the MOH that's in there and I'm going to divide it evenly amongst all the jobs, then would it make sense that the person who bought the coffee table gets the same amount of MOH to their job as the person who bought the bedroom set? It wouldn't make any sense. It's not a reflection of the fact that those two jobs, like one's very small and one's very big. I need something that gives me some kind of way of dividing up this MOH that's a reflection of the job that I'm trying to cost. So the system that we learn in Chapter 3 is called normal costing. It has a couple names. You're either going to get it called normal costing, and sometimes they're going to call it using the predetermined rate. And sometimes, just because he loves to like spice it up a bit, sometimes he'll call it a one-rate system. This is particularly in Chapter 5, when you learn about ABC, which is similar but uses multiple rates. In Chapter 5, he'll start saying things like a one-rate system. He's referring to this, the predetermined overhead rate. Okay? So all of this is basically a system by which we figure out how am I going to get my overhead into my WIP. How am I going to assign it? Okay? And for overhead, it's a system where we apply. That's the word that we use, apply, using the predetermined overhead rate. Okay? That's why, see, do you love how I'm doing multiple colors and things? The checkered line, it's applying, because it's an estimate, versus these, which are based on observation and are directly assigned. Okay? So here's how the overhead rate works. At the beginning of the year, or even before the beginning of the year, during budgeting, the the year before, I'm going to take some very good educated guesses. I'm going to take a guess at what my total overhead is going to be for the coming year. Estimated total MOH for the coming year. Okay? And I'm going to say to myself, I need to figure out a way in which I'm going to divide all of this overhead amongst all of the units that I'm going to make this year. And my units are very different, so I need to figure out a way that I'm dividing it that isn't just unit for unit. So what I use is an activity base, okay? And an activity base is like a bridge. It's a connector between your overhead and your units, right? These direct costs, they have a direct causal relationship. They don't need a bridge. They're already friends. But these guys, it's like they need to get set up on a blind date. They need someone to help them out. And that's going to be your activity base. Okay? The activity base can be anything. The company can choose what they want. 9 times out of 10 in this class, it is going to be direct labor, either expressed in hours or in dollars. And then the other 1 out of 10 times, it's either going to be machine hours, and a couple times I've seen him use direct materials. He could throw something else at you, but those are really like the most of it, okay? So the idea is that either your labor or your direct materials or your machine hours, the idea is that the amount that you spend on one job for either your DM, your DL, or your machine hours is a reflection of how big or how much resources that job took up. And that you should assign overhead proportional to that thing. So for my coffee table, I had a worker spend 5 hours on it. But for my bedroom set, I had a bunch of workers, and in total, they spent 150 hours making it, right? So by using that activity base of labor, I can see that proportionally, this deserves 5 to 150, right? 150 hours to this thing, to 5 hours, or whatever I said they took for this guy. That gives you an indication that this bedroom set should get many, many times more overhead assigned than the coffee table. That's what an activity base does. So I'm going to take this total estimated overhead for the year, and I'm going to divide it by my total estimated use of the activity base for the year. So if I think I'm going to spend $1 million on overhead for the year, and I think I'm going to work 500,000 direct labor hours, then my rate is going to be $2 per direct labor hour. So that means for the coffee table, I would assign 5 hours of labor multiplied by $2, $10 of overhead to the coffee table. And for the bedroom set, 150 hours of labor times $2, I would assign $300 of manufacturing overhead to the bedroom set. And that's how I would figure out what overhead gets assigned to each particular job in my WIP account. Go for it.
Can you repeat the last one?
The last?
The last one. Can you repeat it?
Oh, that's how I figure out how much overhead gets assigned, i.e. moves from my overhead account into my WIP for each job. Because remember, my WIP is my mixing bowl. So I put my DM, my DL, and then according to the activity base, I apply the overhead. my overhead is applied to each and every single active job in my WIP at the end of every single month or period that they're talking about. So when you have an ending WIP, the total value in that WIP is going to be the DM, the DL, and all its associated overhead that should be applied. And when I finish a job, I apply the overhead and get the total cost, and it moves out. Does that all make sense to people? Go for it. The word requisition usually only refers to direct materials. Yeah. I mean, the concept of requisition is that I ask for something to move from one place to the next. And so that really only makes sense with materials because I wouldn't really requisition labor. Indirect materials, I mean, everything that leaves the raw materials account, you'll see in like the T accounts, they call it requisitions. That being said, like indirect materials would be requisitioned out of an inventory, perhaps, if they were kept in an inventory. Like some indirect materials, they're not, some of them are in inventory, some of them aren't. Sometimes all of it is kept in one inventory, sometimes it's kept in separate inventories. It depends on the company and the question. But I guess what I'm saying is, yes, they would be requisitioned, but they wouldn't be requisitioned for a specific job. Like for example, if I'm the maintenance guy, I would requisition a can of oil to go and oil all the machines. So I requisition it, I need the materials, but it's not for a specific job. Whereas direct materials, when I requisition them, I know what job they're for. Does that make sense? I mean, if you're talking about the T account questions, you're going to see that in the T account, everything that leaves the account is called requisitions, i.e. everything that's left the account. But everything that leaves the raw materials account is a combination of both the direct and the indirect. That make sense? Say that again, please.
They gave us indirect materials. Do we have to subtract that from the raw material inventory to avoid double counting?
It depends. Sometimes in his question, he'll tell you that, sometimes he'll say to you, indirect materials are handled in a separate inventory account. So if they're in a separate inventory account, then no. But if he doesn't say that it's a separate account, then yes. Honestly, a lot of these questions, like, I can't give you a specific answer because he can change the circumstances in the question because managerial accounting changes depending on how the company organizes itself. So he can tell you in the question that all raw materials are for everything, direct and indirect materials. Or he can tell you that they're handled in separate accounts, in which case they don't affect each other. So that's the thing I think that makes people stressed about this class sometimes, is that he can change tiny details. Like there's a lot of customization that you can do in questions. So you have to just be vigilant about reading the question carefully. Okay. So now is the easy part, which is everything goes into my WIP and it mixes together and out pops finished goods. The items that move from WIP to finished goods in any particular period is called my cost of goods manufactured. My cost of goods manufactured is what leaves my WIP and goes into my finished goods account in any particular period. It's essentially the cost of the units that I finished this period. Okay? Then my finished goods hang out in that inventory until I sell them. And when I sell them, that is my cost of goods sold. And they go into an account called the cost of goods sold. Okay? So both what leaves the account that month, we call it the cost of goods sold, and it goes into an inventory. They have ending balances. Factory labor, MOH, and COGS, like factory labor, at the end, it's just an in and out account. It doesn't have an ending balance. What goes in, assigned out. MOH, at the end of every period, we have to balance it. It's over or underflight overhead, that's the next thing I'm going to talk about. And cost of goods sold, it's an expense account. I report it on my income statement and it zeroes out every month. Okay? Understanding this flow is so central to understanding chapter 3. And tomorrow we're going to try to do 3 chapter 3 questions. Very quick, we're going to try, because there's kind of 3 permutations of what he asks. He's either going to ask you to do journal entries, so he gives you a series of transactions, you have to journalize them. He's going to give you kind of like a Sudoku game or a crossword puzzle that has to do with T accounts. I hope you've been looking at past exams and what I'm telling you is like no surprise. Or the third option, which is, in my opinion, the most difficult option, which is where he gives you a lot of information about what goes on in a company during a certain month, and then he asks you a series of questions like, what is the total cost of job number 80? What's the ending balance in WIP at the end of the month? What's the cost of goods sold this month? Give me an income statement, right? So we're going to try those all tomorrow, okay? The last thing I want to talk about is the problem that this predetermined rate system gives you at the end of every period and or especially at the end of the year. Applying overhead like this, the problem with it is that this is an estimate and this is an estimate, which means that this is an estimate. It's your best guess. So all of this that I'm applying to WIP is essentially me taking a very educated guess, but it's a guess. And at the end of the month or at the end of the period, you're going to have to reconcile your accounts to reality. Okay? T account. MOH. So, T account, I hope everyone has vaguely familiarized themselves with this. This is basically just a representation of everything that comes in and goes out of the account. And the left, right, is your debit, and the right is your credit. So it's the same way as any other account works. Depending on what type of account is, your debit might increase or decrease, your credit might increase or decrease. This is basic double entry system, which, by the way, you should be at least familiar enough to do journal entries for chapter 2. You really should feel good enough to be able to do journal entries for at least this system. Other than this, it's very unlikely you'll have to do journal entries. And I know that some of you hate journal entries, but you have to at least know those, okay? So for MOH, the left side debit is essentially money coming into this account, i.e. it increases the account, right? And credits is money leaving this account. It's decreasing the MOH. In a system where we use a predetermined overhead rate, it's kind of like the left hand doesn't know what the right hand is doing until the end of the month, where you have to try to reconcile them. So essentially, on this side, we are accumulating actual costs. The magic word here that you're really spent that money. So these are costs that are increasing the MOH account. Simultaneously, I am applying MOH using my predetermined overhead rate. So money is, actual costs are coming into the account, increasing it, and simultaneously, I'm getting money out of that account by applying it based on the rate. And these two things are not really like having anything to do with each other until the end of the period where I say, okay, what are my totals? And I'll find out that I actually incurred $80,000 and I applied $100,000. Which means $80,000 of actual expenses came into the account, but I moved $100,000 out of the account using my rate. So that means that the balance I have, which is the difference between these two, is a credit balance of $20,000. I.e., I applied too much, right? The applied side is too much. I've over-applied. Now this account needs to zero out. At the end, both sides need to be equal. So the solution to this is to do an equal balancing entry on the other side, which means I have to debit MOH. I.e., I'm going to put money back into this account. So when I do this, I balance the account, it's at 0. The opposite could happen. At the end of the month, I incurred $120,000, but I've only applied $110,000. In this case, when I take the difference between the two, this side is higher. How much is it higher? By $10,000. So that means that this side is less than this. I didn't apply enough. I've under-applied. Okay? People get really confused between over and under. Just make T and count. I've under-applied by $10,000. My solution to this, and I'm going to get to your question in a second. Where's my red guy? Oh, there he is. I'm like getting way too carried away with this chalk. My solution is to do an equal balancing entry on the credit side. I.e., I need to get $10,000 out of the account. I need to move it out. Okay? Now, when I'm saying things like I need to put money back into the account, I need to get money out of the account, what do I mean? Like, where's the other entry? There are two options. Either there's two methods, and he has to stipulate for you in the question which method to use. One method is the cost of goods sold method. Okay, so he's either going to say the word cost of goods sold method, or he'll say it's adjusted directly to cost of goods sold, or he will tell you that the amount is immaterial. If he says to assume the amount is immaterial, that's code for use the cost of goods sold method. And in that case, when I say I need to get this money out, then I would do a journal entry adjusting against cost of goods sold. So my journal entry would be my MOH account for $10,000, my cost of goods sold for $10,000. And what this does is decrease this account and increase this account. entry against one account, cost of goods sold. The other method is called the proration method. That method is one where you adjust against 3 accounts. All the downstream accounts from MOH. So WIP, finished goods, and cost of goods sold. He either is going to tell you specifically to use this method, or he's going to say, assume the amount is material. Code word for use the proportionate method. Okay, the proration method. This is one where instead of just adjusting against one singular account, I'm going to adjust it against 3 accounts. So instead of it just being against COGS, it's going to be against COGS, WIP, and finished goods. How do I know how to divide the amount? I divide it proportionally based on the ending balances of these accounts. So in the question, you need to look for what's the ending balance of WIP, finished goods, and COGS. So let's say WIP is 10, finished goods is 20, and COGS is 70. That adds up to 100. So then you just find the percentage for each of them. I obviously use really easy percentages, right? 10 out of 100, 10%, 20 out of 100, 20%, 70 out of 100, 70%. But you just use whatever the balances are, and that's the percentages that you use to divide up the adjustment. So here, WIP is 10% out of the total, so WIP would get 10% of this. Finished goods is 20% out of the total, finished goods would get 20% of the adjustment. Cost of goods sold is 70% of the total ending balance, they get 70% of the adjustment. 9 times out of 10, if you get an over or under applied adjustment, he's going to tell you to do it to cost of goods sold. Every once in a while, he tests proration. Now I can. Because I'm like that. Go for it. I was getting sad that you hadn't talked to me in a while.
And if you want to over-apply, you just debit MOH and credit all the rest.
If it is over-applied, yes, then basically this journal entry would be opposite. I'm decreasing these other accounts, and I will be increasing MOH. The whole point of this is to bring MOH into balance. It's the MOH account that you need to zero out. Yeah, it's like a little code that he could use to kind of test whether you understand why a company would use one or the other. And it's because if I adjust only my cost of goods sold, remember that of all these accounts, finished goods, WIP, and cost of goods sold, WIP and finished goods, these are inventory accounts that sit on my balance sheet, but cost of goods sold is on my income statement. So if I mess around with my cost of goods sold, I'm directly messing around with my net income. So if my adjustment is really big, that means it's going to really change my net income. And if my adjustment is like these, where I'm increasing cost of goods sold, if I increase my cost of goods sold by $10,000, I'm directly decreasing my net income by $10,000. That's why if the amount is very large, I will choose to split it up. So it's not so much of a kick in the pants to my net income, right? Go for it.
So what does that have to do with material and immaterial?
Because material and immaterial is a very important accounting word, which if any of you become auditors, you're going to drown in the notion of materiality. It just means whether the amount is big enough to be important. Material means makes a difference. So, for example, if I brought my car in for repairs, and I got he gave me a phone call and he said, Laura, I'm really sorry. The estimate for the repair that I gave you it's not true, it's going to be more than I thought. And I said, how much? And he goes, $5 more. I'd be like, why did you even call me? That doesn't even make a difference to me, right? But if he called me and was like, it's going to be $1,000 more, I'd be like, I would be selling my car. Do you know what I mean? Because the $1,000 makes a difference for me, but the $5 doesn't. So the $5 is an immaterial amount for me, but the $1,000 is material. So, and the point of my example is that materiality isn't a fixed number. It's different for different people and different for different companies. Like for some companies, $10,000 is a material amount, but for Apple, they don't even care. No one's getting up out of bed for $10,000 at Apple. Do you know what I mean? Like if the car repair was for like, I don't know, like if they were calling Oprah Winfrey, she'd be like, oh, $1,000. Why did you even bother to call me? Because Oprah Winfrey has $1 billion. She doesn't care about $1,000. Maybe she does. I don't know. Exactly. But you know what I mean? Okay. Yeah, surprisingly, sadly. Okay. So 4, 5, 6. Do people want a longer first half or a longer second half?
First half.
We're going to do this by hands. There's two choices. I'm either going to do chapter 4 right now. Chapter 4 is not long. It's maybe like 30 minutes of talking, maybe 40. I can either do it right now, and then we take a break, and when we come back, we just have to hit chapter 5 and 6, or we take our break right now, and the break is going to be, a full 30 minutes, okay, because, like, no one can, like, 5 hours, come on, let's be real. So, it's going to be 30 minutes, so the question is, do you want your 30 minutes now, or do you want your 30 minutes in like 30 to 40 minutes? So everyone who wants to take a break right now, put up your hand. 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, guys, you're changing. Come on now. Who's there? For real? Who wants it now? Okay, who wants it later? Alright. I thought that half of you were going to be like, I want to decide. Whatever.
Since the break is not granted, no, just see the thing again. You actually put the person because it isn't different. It is, someone cannot put it.
Oh, okay, so chapter 4 is actually not that much theory. Chapter 4 is best explained, in my opinion, through lots of problems. Chapter 4 has like this really bad rep as being so incredibly hard. But I feel like chapter 4 is like really misunderstood. And if people would just take time to get to know chapter 4, they would find that they were actually kind of a cool person. And you know, like maybe they could hang out and like go to movies with their friends and stuff. So don't be afraid of chapter 4. It's actually one of the chapters where you have the most structure. And that's why I'm going to say very, very key that you memorize the template for making a process costing report. The template is slightly different whether you do it under weighted average or FIFO. Okay? It is very, very similar, but just different enough that you really should put effort into memorizing the template under weighted average, memorizing it under FIFO, and when you come to the chapter 4 question, no matter what he asks you, doing the report is going to give you the answers. Depend on the report. If you feel lost with your chapter 4, like if you read it and you're like, oh my god, it's so spicy, I can't even figure out going on here, start making your template in your booklet. Make your template and then let the template help you out. Let it guide you as to what it is that you're looking for. Okay? Like the magical template. Just learn it. Okay? Now that I've had my template love song, let's talk about the actual chapter. So here we have a company where they're making many of exactly the same thing. This is mass production. This is like a conveyor belt system, okay? Now, in this system, it doesn't really matter what I spend on individual objects because each object is exactly the same. So it's not worth my time to really care about this one can of Coke and how much I spend on it versus this next can of Coke versus this next can of Coke because it's all exactly the same. So like I said, this whole chapter comes down to one fraction, which is all costs during the period divided by all units produced during the period. This gives me my unit cost. So all I do is say, listen, everything I made is exactly the same. So I'm just going to measure how much money did I spend from the first of the month to the end of the month, and then I'm going to divide it by how many units I made from the first of the month to the end of the month. Sis bam boom, here's my unit cost. That's at the basis, the simple thing that we're trying to do. But the problem with this, and the thing that makes the process costing report so complicated, is one major thing, which is the WIP account. The WIP is my problem. Okay? And here's why. When I'm actually making stuff on a conveyor belt, in a mass production way, the whole point of this Henry Ford system of efficiency is the notion that instead of having one person or one team of person make a car from beginning to end, he said, why don't we break this into pieces, into sequential steps? And instead I'm going to have a team of people and they just work on the frame. And then the next team of people, they put on the doors. I don't know actually what the order is. And then these people put on the wheels. And then these people put in the steering wheel and then beep beep, it's out you go. You know what I mean? He's like, if you break it up like that, then I can be so much more efficient. Because these people just have to do one piece of the job. And then they pass it on to the next person and they start a new car right away. And it does increase efficiency, but what it also means is that at every moment, a new unit is coming into the system and a new unit is coming out of the system. And at any one period, oh my God, it's 5 o'clock on the 31st of the month, I ring the bell, everybody put down what you're doing, go home, have a nice day. End of the month. My accountant, tell me what my unit cost is. And the problem for the accountant is there are all these units that are in the middle of being made. They're still on the conveyor belt, right? So they've gone into the system, but they haven't come out yet. They're in my ending WIP, right? Now, these units that are on my conveyor belt, in my ending WIP, I've spent money on them so far, right? People have put labor into them, I've put materials into them, but the problem is that they're not finished yet. So if I money that I spent during this period, this all costs during the period would also include all of the value that's still on my conveyor belt, that isn't finished yet. If I took all of the money, including that money that's sitting on my conveyor belt, and I only divided it by all units that I finished this period, you know, if I only counted up how many units came out this month, my finished goods, then essentially I would be saying everything that's on my conveyor belt right now, everything that's in my ending WIP, that's worth nothing. And that doesn't reflect reality, right? Because some of the money that I spent this month, I spent it on the units that are in process. Okay? Is this from me?
Actions for the next group. Sorry.
I was going to be so excited, it was going to be like my moment. Imagine what would you get me that was in boxes like that? It would be, guys, who come up with a better present than that? Don't get me wrong. I'm not being weird. I'm realizing that that sounded really bad. Not my fault. You know what? I think things and then I say them and then I kind of regret them sometimes. Okay? It happens. So, all of these, the WIP is more stuff. You guys are so good to me. All of the things in the WIP give me this problem where I have to find a way to account for them. So, the solution here is to find some kind of system that more accurately reflects the fact that some of my effort and some of the money that I spent, not all of the money that I spent went into just making finished units. Some of the money that I spent went into making partially finished units. Okay? So the way in which we solve this problem is by using something called equivalent units. So now, instead of finding my cost per unit, I'm going to find my cost per equivalent unit. Okay? Now, what are equivalent units exactly? For those of you that have already seen my amazing jam metaphor, here it comes again. Let's imagine that I make jam, okay? In my spare time. I make jam. And let's say that on the first day of making jam, I work all day and I manage to make 10 jars that are completely finished. And then I am able to do 10 more jars where I was only able to get those 10 jars. Actually, I don't want to say 10, I want to say 12. That gives me a whole number. Now, if I want to translate this into equivalent units, because physically, my physical units is that I have 22 jars that have basically come through my kitchen today. But some of the jars are finished and some of the jars are not. So this would be my units completed today, and this would be my EWIP, my ending work in process for the day. And if I wanted to transform this into my equivalent, how many equivalent units did I make? The math is really simple. the number of physical units multiplied by the percentage of completion of those units. Okay? So in this case, I would have 10 units that are 100% complete, plus 12 units that are 25% complete. So 10 times 100, this is 10 units. 12 times 25% is 3 units. Is it 3 units? Please don't tell me I'm embarrassing myself.
Yeah.
It is 3, right?
Yeah.
Okay. So my number of the equivalent units is 13. So I have 22 physical units. But my equivalent units is 13. Equivalent units is like saying, if instead of spending my time making 10 complete jars and 12 25% done jars, if all of that labor had been put towards completed jars only, how many completed jars could I have made? And the answer is 13. Okay? It's like saying, what does this equal in totally done jars? So at the basic, it's really simple. It's saying, if I add up all of the effort on my conveyor belt, how many completed units would that amount of effort equal? And I add that to my units that are actually completed, and that's the number that I use for my denominator. Okay? So this is the very basic idea of equivalent units. Now, where it gets more complicated is that there are two potential systems under which I will calculate my equivalent units. One is weighted average, and the other is FIFO. Okay? And the reason why here it didn't matter what system I was calculating these two under, like right now, why does it not matter whether this is FIFO or weighted average? Why would it be that under both systems I would have 13? Exactly, I don't have a beginning width. Okay? And that's why the system only comes to matter for me on day 2. Because really the difference between this system, it only really applies to a different way in which they treat the B width. Okay? So let's look at the main difference between these two systems. Go for it.
That's a day 1.
Yeah, like in my analogy, this is my first day. I've only got I haven't got a B width because I only started my amazing new home jam business today. On day 2, my life gets more complicated. Okay? So, this isn't in your textbook. I made this next part up, and this is my personal way of seeing it that I feel is like clarifying. I feel like to understand the difference of like world views between FIFO and weighted average, it's basically a different question that you would ask yourself at the end of the month when you were trying to do this accounting. Okay? Weighted average asks itself, what is the state of my units at the end of the period? Whereas FIFO, the question being asked is, what work did I do on these units? song and dance before, but if you haven't, like, write this down and think about it. Okay? It's a very subtle difference, but it's meaningful. So, and it's going to become apparent when we start talking about day 2. So in day 2, I started making blue jam instead of red jam. Okay? So this is how we know what happens on day 2. When I show up on day 2, I'm not even thinking, these guys are in the past. This is day 1, these are done. But I have these units to start with, because the first thing I'm going to do when I come in on day number 2 is finish what I started the day before. This, which was my E whip yesterday, is my B whip today. So my B whip is 12 units that are 25% done. Now what I do today is I finish these units. I completely finish 7 more units. And I get an additional 20 units halfway done. This is what I do on day 2. Okay? Go for it.
Shouldn't your beginning or the process also include the 10 units because you did on the same day as
This?
your 12?
This?
Yeah,
This is day 1.
yeah.
So these are finished.
Right, those are going to be your finish, like all the ones are red, right? And then it'll also be your beginning for the next period, right?
No, no, no. These are gone. I sold these to somebody. They came by last night. That's my jam. I'm very popular. They heard about me. So I don't even have them anymore. I'm going to give up this accounting gig and become a stand-up comedian. Forget that job stability that I've done in the last 2 years. I hope you all know that if I answer questions in that funny way, I'm not like making fun of people, I'm just being stupid. I love you all so much. Sure. I read a really long week. I'm sorry, I'm like really giddy. Okay. So now my question is, how do I calculate my equivalent units? And the answer is different depending on whether I ask myself the weighted average question or I ask myself the FIFO question. Okay? Now, weighted average says, what is the state of my units at the end of the period? And if I look at these units, what is the state of these 12 units by the end of the month? They're 100% done, right? I finished them. What's the state of these units at the end of the month? They're 100% done. I finished them. What's the state of these units at the end of the month? They're 50% done. So for weighted average, they look at these 2 groupings of units and they say, they're both finished. They're the same thing. I only care that they're done. I don't care that some of it I did last period. That doesn't matter to me. I just care what is the state of them at the end of the period, which is that they're 100% complete. So under weighted average, see, look, these are sold. So under weighted average, I would only have 2 categories of units. I would have those units which are completed and transferred out, is the terminology that we use. And the number of physical units is the 12 and the 7 together. So there's 19 physical units that are 100% complete, which gives me 19 equivalent units. And the only other category is my ending WIP, of which there are 20 physical units that are 50% complete, which means that's 10 equivalent units. Weighted average would see this as being 29 equivalent units. FIFO would beg to differ.
I can't see, what did you write completed?
It says NT out, transferred out. FIFO is asking a different question. FIFO asks, what work did I do on these units this period? FIFO says, I don't want to measure, I don't want to include in my measurement of the units that I produced this period any work that I did on those units in prior periods. I only want to know, I want to quantify only what I did today, not yesterday. Okay? So FIFO says this 25% that I did yesterday, I do not want to include it in my calculation of equivalent units for today. I want to separate it out. I only want to measure what work did I do today. And the answer is, I only did the blue. I only did 75% of the work on these units, right? The amount that was required to complete them. I did 100% of the work on these units, and I did 50% of the work on these units. So notice that FIFO and weighted average, they agree on these two units, but they don't agree on how to treat the B-WIP. The B-WIP is like the battleground where they disagree. So if I did this, when I add up my equivalent units here, I would, instead of having just 2 categories of units, I would have 3. I would have the to complete my B-WIP, so to complete my B-WIP, which is 12 units, 12 physical units, multiplied by the 75% of work that I had to do to complete them, which is what, 9? Then I have these units. These units are those that I started them this period and I completed them this period. So started and completed. 7 units, 100% done, equals 7. And then I have my E-WIP, which is 20 units that are 50% done, which equals 10. What is that? That's 1626. So weighted average sees this as 29 equivalent units, and FIFO sees it as 26. Okay? There are 2 situations in which weighted average and FIFO if I did these equations, they would come out exactly the same. One is if there's nothing in the B-WIP, right? And there's one other, well, that's the only time that they would actually have the same amount of equivalent units. There's another situation in which they would have the same unit cost. Pardon me, I misspoke. Okay? Now, this is the very basic understanding of their difference, using JAM as an analogy. But to go back to like the reality of the level that you're expected to understand this for the exam, what you need to get is that using a weighted average system is basically one in which my unit cost from last month is always being mixed a little bit into my unit cost this month, right? Because this, 25% of the work from yesterday, this work would have been costed at my unit cost last month, right? And then this month, I'm just mixing that in. And so it's going to affect my unit cost this month. That's why we call it a weighted average, right? I take some work that I did at which I was able to accomplish this particular cost per unit, and I mix it into the work that I do this month where maybe I was either more or less efficient and have either a higher or lower cost per unit, and I come up with a weighted average. Whereas FIFO, the unit cost that you calculate under FIFO is going to be a very precise reflection of only the work that you did this period. Your unit cost from last period does not mix in at all. Your peas and your carrots, separate. Last month's unit cost, big line. This month's unit cost, big line. This month's unit cost. Weighted average is always like slipping a little bit of unit cost under the door and mixing it in. Okay? So under weighted average, you kind of get the smoothing effect. And under FIFO, you will get a very dramatic measurement. If your unit cost changes at all, you will see it right away.
It may not have been for this chapter. I think so. When I was in the tutorial for chapter 4, you said that you might ask a question at the end of the long answer, being like, why would you want to use FIFO instead of weighted average?
Maybe you're two timing on me with Mark?
Well,
A little bit? I wouldn't mind. Mark's that guy. No judgment, man. No judgment. I mean, if that question was asked, like, what are the benefits of FIFO versus weighted average, or why would someone choose FIFO over weighted average? I mean, it depends. Like, FIFO, you would see changes in your unit cost right away. So maybe if it was something like where they really wanted to see. Oh, no, sorry. I obviously like to talk.
do you remember saying that if you just say that FIFO is more accurate, you'll probably get it?
You are thinking of ABC. You are thinking of ABC.
Yeah.
That's okay. But I like that you pay attention. Yeah, I'm going to start getting to that. I'm building little bits on little bits. I'm going to talk about transfer data. Maybe not the very next thing I say, but like in two things. FIFO will always be smaller than weighted average unless there is no BWIP, in which case it will be equal to weighted average. Yeah, it's as if it would be on first day, or for some odd reason, you have no ending with the month before because something happened. Yeah, everything, like magically everything cleared out. There was another. No? Live? Good? Okay. All right. Yeah, okay. So this, one thing that gets people very confused is they rocket for the equivalent units part, and then they get to the part about costs. And people get confused about how under FIFO and weighted average, under one you include the costs of the BWIP, and under the other one you don't include the costs of the BWIP in the cost streams, right? And the reason behind it is the exact same reason here. If under FIFO, I intentionally leave out this portion in calculating my equivalent units, then when I calculate the total money in the BWIP, right, the total costs to divide to get my unit costs, I cannot include the dollar value of this labor. It wouldn't make sense. If I don't include the effort, I can't include the dollar value. Okay? And that's going to become more clear when we do examples tomorrow. But it's just a basic same reflection of this concept of separating out the BWIP. Go for it.
So in a sense, it's like not double counting, but you kind of are, because your equivalent units will be included in both. Sorry, let me rephrase that.
What are you talking about? For weighted average for
Weighted
FIFO?
average, you'll have a higher equivalent unit, but you're also including the cost from
Last period.
last
Exactly.
period.
Because think about how you assign money. Everyone picture, I hope that you're all at the point where you can at least vaguely picture the cost reconciliation at the bottom, okay? The cost reconciliation at the bottom, I'm assigning my value to my account, right? I say, okay, all my units that I finished, here's your value. How many equivalent units multiplied by cost per equivalent unit? You're worth $10,000. That money transferred out of my department. EWIP, this many equivalent units times this cost per unit, dollar value, that stays in my department, in my WIP account, as what's going to be my BWIP tomorrow. When I calculate my equivalent units the next day, if I mix in that EWIP, right, which is the BWIP, whatever it was, the EWIP today, the BWIP tomorrow, if I mix it in, I mix in the units, I mix in the money. What comes out at the end is just going to be an average of the amount of units and the money. But if I do it under FIFO, I say, okay, I want to keep that number of equivalent units and its money segregated, separated, and not mixed into the whole thing. So that when I get my cost per equivalent unit and I do my reconciliation at the end of that next day, I will have my beginning balance in BWIP, which is what I had assigned to that EWIP the day before, and then I add my subsequent labor using my equivalent units that I calculated under FIFO. Go for it.
You were saying before you can include all the steps and you'll get full marks. So when it asks for it to be separated in A and B, you don't need to separate your steps, you can just write it all out.
What do you mean?
I mean, like if the marker's looking through it and they're asking for a specific part in A, it's okay if you just write out your entire
If you make a whole report,
yeah.
but they're asking you like, because sometimes they'll just be like, make the costing report, and you're like, shashing, here it is, right? But if they say, I want, like sometimes he'll say things that kind of like trip people up because they don't know what it means. If he's like, find me the number of equivalent units, then I want to know my cost per equivalent units, then I want to know the amount assigned to completed units and the amount assigned to EWIP, like, and that's A, B, C, D. All of that you find by making the report, and it is acceptable for you to just make the report, but then you have to go in and indicate what in that report is A, what in that report is B, C, and D. Because it's not just him being like, make the report. He wants to see that you know what in that report is your equivalent units, what in that report is your cost per unit. So you have to go back and indicate somehow, either by highlighting it and then writing an A next to it, or you can at the end of the report rewrite your answers and just have the report as your calculations. But if he asks for the requirements separated, you have to indicate what those elements are. If he just asks you for the report, then you're like really happy because it's a lot easier. Well, a lot, like a little bit easier. I'm not going to make it as like as if you can identify the pieces. Okay? Right. Let's talk about transferred in. Ooh. Yeah. That's a good question. Okay, so I wish I hadn't erased this, but anyway. So notice that on the weighted average, we have a category my BWIP and started and completed, if I combine them together, these are my total completed units that are transferred out. Essentially, this category, completed and transferred out, can break into two pieces, which are this. Because these two things together are my completed units. Right? These two things together are my units that I started this period. Right? These are the only units that I didn't start this period. These were the only units that I had at the beginning of the month. Therefore, all of these units, I had to have started them this period. So these units are both the started units. These units are both the completed. These units are the ones that are both started and completed. Does this all make, is this clarifying? Both of these categories have been transferred out because both of them are completed. I've completed all 19 of these and they've been transferred out. But these are, I completed the BWIP and transferred these out. These I started them and completed them and transferred them out. I mean, maybe this saying completed and transferred out, this transferred out is, I could just say completed. Right? It's just kind of like a thing that people say, like completed and transferred out. It's like, you know, like habit almost, you know what I mean? I could easily say to complete BWIP and transferred out, started and completed and transferred out, but it sounds like bad. I don't know, it just doesn't sound right, you know what I mean? But do people get this? Amazing.
It's the same thing.
Yes. I mean, as far as like how, whether these units are
saying that there are problems in the book where we say transferred out and
any units that are completed have been transferred out. I'm not going to be like one singular unit that I completed, but I particularly like to keep you in my department. Can of Coca-Cola. No one gets to drink Coca. You know what I mean? Like everything that I complete is transferred out. So if they say anything like the units that are transferred out, that's them saying the units that are completed. Okay? Okay, now are we really like okay to erase this? No, we're not.
Yes, we are.
Okay, talk to me.
In what case is it constantly
If the BWIP is 0, or if my cost per unit last month is the same as my cost per unit this month. If under FIFO my cost per unit last month is equal to my cost per unit this month, then if I would do the cost per unit this month under weighted average, it's the same under FIFO as weighted average. Because if I take the average between two numbers that are identical, then the average is going to be that number. Let's talk about transferred in. Manufacturing, tasks are broken down into like pieces, right? So instead of one person just making something from beginning to end, I break something up into pieces. In this case, I'm breaking it up into departments. So let's imagine that I really like my bread example, but let's imagine that what I make is bread, okay? And my process for making bread, I have separated into 3 distinct departments. I have the mixing department, I have the baking department, each of these departments, like when you make your process costing report, it's for one department. At the end of every month, each department produces its own process costing report, saying what I made in my department this period and what its value is. Reporting what is my EWIP, so what remains in my department, and what I've transferred out to the subsequent department. So if I look at this process, in my mixing department, this is my beginning department. They're the only department that does not have transferred in. They're the department that starts making units from nothing. So they start with absolutely nothing, and they begin the process by adding DM, DL, and MOH, right? All of that adds together, and units are produced. At the end of the month, I calculate what my process for the month, what my unit cost is, and I assign that value. This total dollar value, it gets separated. Some of it stays in my department as my EWIP, my units that I haven't finished. The units that I have finished, they're assigned a dollar value and they are transferred out. Okay? So I transfer out 100 units, and the value of them so far is $50. Right? So in this department, my mixing department, I have put flour and eggs and water and yeast, and I mixed it all up, and I produced dough. That's what I've produced. I transfer out my completed dough into the baking department. The dough that I haven't finished yet stays in my department as my EWIP, and that's the process costing report that I produce at the end of the month. For the baking department, my process is that I cannot do anything. I can't bake anything until I get dough, right? So I don't start units from nothing. I start units based on what I get transferred in from the previous department. I'm a department where I take value. I take the value that was transferred in from the previous department, and I'm going to build on it by adding my own DM, my own DL, and my own MOH. Go for it.
The 100 is the frequency?
Yeah, units, dollars. It doesn't really matter. I'm making shit up. Just stay with me for my beautiful narrative of bread baking. And then we can put some jam on it. I don't need to finish. Okay, so in this case, my transferred in, and people get confused about this. Transferred in is not the baking department's BWIP. Transferred in is the new unit started into production in baking. The baking department at the beginning of the month, they have their own BWIP, right? They have their own BWIP, which is dough that they got last period, that they received last period, and they started to work on it, so they've added something to it, but they have not yet completed it. So maybe they took the dough from last month and they divvied it up into the baking pans, but they haven't put it into the ovens yet. This month, they take the BWIP that they already have, they get new dough coming in, which is they're transferred in, they're started this period, and that's the labor that they're doing. At the end of the month, I'm going to get like very color wheel on you right now, because red plus blue is purple. Oh my God. They have a new value for their finished units, which is baked loaves of bread. And their baked loaves of bread have a cumulative value of the dough transferred in and all of the DM, DL, and MOH that they added to it to transform that dough into finished loaves. That amount, some of it stays in the department as its EWIP, which tomorrow will be its BWIP. And the rest of it is its completed units, which is transferred out into the packaging department, which is the packaging department's transferred in. So let's say they transfer out 75 units, right? At a total value of $80, right? Because these units are a cumulative value of the value given to it in mixing and baking. Now it's going into packaging. Yeah? Yeah, like basically in the baking department, I have my BWIP. That BWIP, I work on it, I finish it. And remember, that BWIP, it has transferred in it, but transferred in from the month before, right? So I have a BWIP, it has transferred in as part of its value. I get new units, and those units have transferred in as a value. But any unit in the baking department is building on value that has already been given to it in the mixing department. Well, the units that are finished, yes. At the end of the month or the day or whatever is finished gets transferred to the packaging department. And those units that are transferred to the packaging department are a cumulative value of all of the value given into it by mixing plus the value given to each unit by baking. My point is that when you have a packaging department, this transferred in is going to be like a singular transferred in for the cumulative value. But I've never seen him do a question where he has 3 departments. I've only ever seen a transferred in where it's 2, but I just want to show you that it keeps going. Okay? And so the same thing happens here. I take these are my new units started into process. I already have BWIP in this department, which were units that were transferred in last period, and they have a value that was transferred in, but from last period. I'm going to work on all these units this period. I'm going to finish my BWIP, I'm going to work on new units, I'm doing a lot of things. You know, I'm a complicated woman. And I have DM, DL, and MOH. All those things add up to a grand total value. So for those units that don't finish, they stay in my department as EWIP. For the units that I do finish, they are transferred out to finished goods at a total cumulative value of this entire process. So the big thing to get from this is transferred in is essentially the way in which I move value, I accumulate value from one department to the next. Now, how does this look on your actual report? You treat transferred in like a cost stream. Which begs the question, what is a cost stream? Okay. My jam example was very, very simple because it assumed that all of the types of costs that I incur making jars of jam are all incurred at the same rate, right? I said, oh, I'm 25% of the way through. If that's saying that, you know what, all my costs, my DM, my DL, my MOH, they're all incurred at the same rate. They were all 25% of the way through. But in reality, different points. So if I were to make a timeline, and I've actually got some confusion about this. When I give you a timeline like this, I'm not saying this is from like the first of the month to the end of the month. This timeline represents from when I start a unit to when I end a unit. This timeline represents the process of making a unit. Unit started, unit 100% done. It's not like a month or anything like that. I realized that some people were confused about that, okay? So if this timeline represents the completion of my units or the process of making units, I might add different costs at different places. In your question, there are two major ways in which they're going to tell you about costs. They're either going to tell you that a cost is added at a certain period or added at a certain moment. Or he's going to tell you that a cost is added evenly throughout. Okay? So if I were to map this, saying that a cost is added evenly throughout, which I'm going to represent in blue, it means that this cost, I am slowly incurring it throughout the entire process. So if my units are halfway through the process, then they have half of that cost. If they're 90% of the way through the process, then they have 90% of that cost. That cost is added completely evenly spread out through the whole process. He often says this for conversion costs, that they're added evenly throughout. Okay? The other option is to say that costs are added at a certain moment. When you see this word at, it means that that cost is added all in one shot at one particular moment. Okay? So whereas this cost, I'm adding it a little bit at a time, if I tell you a certain cost is added at the beginning of the process, it means that all of that cost, I add it to the process right away. So if I'm making bread, although my direct labor and my manufacturing overhead, like my rent and my electricity, might be incurred through my whole process of mixing and kneading and whatever, all my direct materials I would put into the bowl all at one moment right at the beginning. So if I was here in my process of making my dough, although I would be only 10% of the way through for my labor and my overhead, I would be completely done for my direct materials, because I would have no more direct materials that I would add anywhere else in my process. So for my jars of jam, I can't just say my jars of jam are 25% of the way done. I'd have to say that there are two, it's like something that's in two states of doneness, right? It's totally done for the materials, but it's only 25% of the way done for the labor. It's like when you go to a salon and get your hair done, but they're doing two things. They're like doing color and he's doing a cut. When he's done the color and the color portion is 100% of the way done, but because he hasn't done the haircut, he's only actually halfway through the whole process. So completely done for color, but the whole process is only halfway through. Get what I'm saying? Things can happen at different moments in the overall process. So a cost stream, and the streams are not defined by what type of cost it is. and people get very, very used to because they learn the template, and then they automatically will write the cost streams, DM, and CC. Because in 90% of the exams, the cost streams are DM and CC. But I'm asking you very sincerely to not get into that bad habit. Yes, it's very likely that those are going to be your cost streams, but it is not necessarily so. And fall 2014, people got real screwed because they didn't know how to deal with a question where the cost streams were not DM and CC, and we're going to do that example tomorrow, okay? You can have all kinds of cost streams. You can have multiple DM cost streams. Like if I told you that if I was baking a cake, I added all my dry ingredients at 0 at the beginning, and then I added my wet ingredients at 25% of the way through, and then at the very end I frosted the cake. In this situation, I have 4 cost streams, right? 1, 2, 3, and 4. The blue all the way across. And I would have to have 4 columns in my process costing report.
So what would the 4 cost streams be called?
The blue, the CC. So I would have DM1, DM2, DM3, and CC, which is all the way across. So let's say my units were 50% of the way through the process. In this case, these units would be 100% done for DM1, 100% done for DM2, 0% done for DM3, and 50% of the way through for CC. Go for it. Transferred in is treated like another cost stream that is, I'm running out of colors, red. It is a cost stream that is treated like a light switch at the beginning. I call these, I haven't mentioned this word yet, but I often refer to these costs that are added at a certain period like light switches. And the reason why I call them light switches is because a light switch is either on or off. For costs that are added at a certain point, they only have 2 options. They're either 0% or they are 100%. They can't be anywhere in between. A light switch is either on or it is off. Those are the 2 choices, right? And you can have, in this case, your transferred in is a light switch at the beginning, because think about it. If transferred in is your new units, then a unit being transferred into your department is the very first step that you need to start a unit into production. So as soon as that unit is transferred in, that is the first step in production, and it is completely transferred in all at once. I'm not transferring in a unit a bit at a time. So treat it like a light switch that's at the beginning of the process. Does that make sense? Go for it. Yeah, like if you're thinking about fall 2014, there was DM chemical and there was DM can. We're going to do it tomorrow together. He didn't, like, if he doesn't tell you what to call them, just indicate what they are, like direct materials 1, direct materials 2. In that case, if you look at the question, he gives you indications to call it direct materials chemical, direct materials can, right? So you can have multiple DMs. He'll probably give you some description of what that DM is, because he always likes to write these long paragraphs about how things are made. He's like completely fascinated. I'm sure he watches those TV shows where like they make stuff on the conveyor belt and you just get mesmerized by like metal pouring into molds and stuff, for sure.
Well, that question, in that case, we need to
to do this because the cost streams are very bizarre. So I'm going to try and do, I'm going to tomorrow try to do 2 chapter 4 questions. One of them is going to be fall 2014, where you have weirdo cost streams. And the other one is going to be one where we have transferred in. I just need to figure out which one. Yeah, because I have to calculate equivalent units in each individual cost stream, because if I have different costs for which I have different levels of completion, then for each of these streams, I'm going to have a different number of equivalent units. Because remember, equivalent units is number of physical units multiplied by percentage of completion. So if I have 2 different cost streams where they're at 2 different levels of completion, that means I have 2 different numbers of equivalent units. So I just have to calculate everything like one. It's like calculating the cost of a unit. It's DM cost all the way down. From, like, I figure out exactly how much DM it has all the way to its unit cost. Then I figure out, see, we're used to in chapter 3 just figuring out a total cost and then divide it by the number of units and it gives me a unit cost. But in this case, what I'm doing is I'm figuring out the unit cost in pieces. I figure out the piece for one cost stream, the piece for the next, the piece for the next, and then I add those individual unit costs to get a total unit cost. Yep.
So what other options, what other costs?
In chapter, we're going to do an example tomorrow where you're going to see where he does that. Like, he might, there's been an exam where he separated out the DL and the MOH, and they happened at different rates. So your cost streams were DM, DL, MOH. There's another exam where you have 2 DM cost streams and 1 CC cost stream, which we're going to do tomorrow. So I think it's going to become more clear for you tomorrow. Yeah. Yeah, that's going to become so clear for you tomorrow, I promise. Come hang out tomorrow, it'll be fun. Go for it. Transferred in weighted average, just treat it like a light switch at the beginning, right? Same thing. And you ask your question, what's the state of completion for this cost stream as at the end of the period? It's been transferred in 100%. The transferred in, the difference between weighted average and FIFO is that weighted average, that transferred in is going to be 100% for each of your lines. For FIFO, it's going to be 100% for the units that were transferred in this period and 0 for the units that were transferred in last period, which are your BWIP. That make sense? All right, I can feel the room really wanting, so I'm going to start back exactly at 4:30. So be in this room at 4:30. We're going to do chapter 5 and 6, and then we are going to go home.
questions. You just win. That's all.
this is as far as I can get. Yeah, like this is where I got these units this period. They tell me where they're at the end of the year. So if I look back and say, what have I done? I did 50% of my 16 years. I did 100% of this part. I've done my homework this past, and I've done a if they tell you it's too easy, the ones that are harder are the ones where they tell you that it's at a certain rate. Because on your timeline, and then you use wherever you're at the CC to let you know whether you finished them or not.
Ça peut pas moi. Ouais, je sais, ça je te dis.
Well, you never have a tool for the units part. You only have a tool for in your money, and in that case, you will have Oh, in the but you never put any here. Yes, absolutely. You only have an open unit in the output, and you have this I've already done this question honestly, take it as I'm going to say this is something in accounting that and even though there is a possibility that he won't specifically tell you, but he will give you information. I'm actually not going to tell you and there's basically 2 signals. Like there's 2 implicit ways that he can signal that there's only one option that he can do. I will tell you right now that I'm going to repeat myself after.
Ah ouais, toi aussi. This is something that you're just going to have to there's some questions that are just like that, where it's like, no, there's no number of materials
looking at all of them, I was like, indirectly or out.
Well, yeah.
Overhead is applied using the predetermined overhead rate.
I think it's up to actually like real cost.
When I come up with my rate, I use an estimated overhead over an estimated activity from if the month before was last year, like if it's January, the month before December, the rates might be different. But if it was like March and April, those rates are the same, it's all the same year. But it's like depending on where what you're looking but that's not often. So think about it this way. If I hold this above my rate, I use this to apply right? I have my applied overhead and I have to compare it to my actual. Now they're saying, imagine that this number and this number are exactly the same. Okay? But this number will say they are less.
Toi aussi.
You guys just like
Yeah. I wanted to.
Oh yeah?
Yeah. Thank you.
not given, then it is impossible for you to do the FIFO method. Therefore, you must use weighted average. And it's because it's impossible for you to do FIFO because you don't have the percentage of completion of the BWIP in order to separate out last month from this month. So that's the flag that you absolutely have to do it under weighted average. The other flag is if the dollar value of the BWIP is only given as a total. Meaning that you don't know what the value is of the BWIP for each cost stream, then it is impossible for you to do weighted average. In this case, you must use FIFO. And that's just a particularity of how the calculation works. Like, think to the section on cost. For weighted average, I have to include the value of the BWIP in each of the cost streams. But if they only give me the total value, then I don't have the broken down pieces, so I can't do the weighted average method. It's him basically giving you a flag that your only option is to use FIFO. If the percentage of completion of the BWIP is not given, then it's impossible for you to apply the FIFO method. It's a flag that you must use weighted average. He's only done it in a couple of past exams, and most of them were pretty older. Like if you're like somebody who's done like a lot of past exams, like you're going really far into the past, you'll see some of these. He might bring it up. It's a little bit of spice. It's a spice that he hasn't used in a while. It's like, you know, something like cumin, or maybe like allspice or something. Feeling one of those forgotten ones. No, cumin is very good for you. Okay, chapter 5. I guess I'll leave that up for a second, because now there's not a lot of people. Chapter 5 is activity-based costing, and to be perfectly honest, this is a chapter where you should be like, the points should be like raining down on you from heaven, okay? Because it's not a difficult chapter, and the question is usually not that tough. Tomorrow I'm going to do like one example of like the toughest ABC that I've seen him do, okay? Usually the questions are remarkably similar. He gives you information about a company. Sometimes it's a company that does two different products, a fancy product and like a bargain product. He asks you A, cost it under one rate, i.e. the predetermined, recost it under ABC, and then he gives you a third question that's usually like, which method would you recommend? So the question is usually very, very simple. But what is ABC? ABC is essentially an alternative to normal costing, okay? So job order costing and process costing, those are costing tools to figure out total cost, right? It's a way of calculating DM plus DL plus MOH. Normal costing and ABC costing, those are just tools for allocating overhead, okay? So don't get confused, like ABC is not a whole new method of costing units. You can use ABC with a process costing company or with a job order costing company. The same way that you can use the predetermined rate with a process costing or job order costing system, right? determine rate. You're just taking your estimated overhead and you're dividing it by an activity base, okay? And then you're using that rate to apply overhead to jobs or units. It's mathematically exactly the same. The only difference is that with normal costing, I take all overhead and I lump it into one big pool. One big pool of overhead divided by, I guess I should write some of this down. One big pool of estimated overhead divided by one activity base. Right? We already know that there's problems with this, right? We already know that essentially this ends up at the end of the year with you having over or under applied overhead that you have to adjust. And that adjustment process really sucks, okay? It means that for most of the year, you're using a costing system that you know is inaccurate, and you're probably either over or under costing your items. So you're essentially operating a whole year with inaccuracy that could make you less competitive, right? Could be cutting into your profit margin. You have no idea until the end of the year. So any way that we can make this allocation more accurate is good for a company. And so somebody somewhere along the way was like, why do we take all overhead and put it in one pool? Why do we do that? Why is our costing equation so simple, right? Total cost is equal to DM plus DL plus MOH. We're kind of like, yes, direct material, very good, very precise. Ah, yes, direct labor, very good, very precise. Ah, absolutely everything else, very good. I will just make one category for all this other crap that is very, very different from one another. Why am I putting in the same category my rent, my insurance, my depreciation, my indirect labor, my indirect materials, my taxes, my electricity, my quality control, my janitors, my everything? Like, if you actually looked at what was in manufacturing overhead, you'd be like, this is a very weird combination of things that have absolutely nothing in common except they are indirect, right? That's the only thing they have in common, is that they're indirect. So why is it just one giant group? And then to apply it, I take that big giant group of things, I divide it by one other super random thing that has nothing to do with this, and then I come up with a rate, right? It's kind of an arbitrary system. So someone said, you know what, if I look at what's actually in my MOH, I realize that these costs, they're not completely disconnected from my units. They're not things that I don't know where that money is coming from. I know what's causing me to spend that money. If I can go in there and I can start to categorize things a little bit better, start to group things together that make sense, I can bust out my MOH not into one big pool, but into multiple pools. I can say, you know what? If I take all of my MOH and I look at it and I say, you know what? A large portion of my MOH comes from quality control. And you know what? Some of my product lines, I do more quality control on them than I do on others. Why am I separating all my quality control costs pretty equally across all my units based on direct labor? Why can't I just pay attention to which products are using more quality control and divide that specific overhead cost based on that thing that is driving that cost. That's going to tell me with more accuracy which units are actually using those costs. It's like someone realized that some things in MOH, I can at least, they're not like a direct connection to the units, but I can make some kind of connection. I can find something that relates my MOH to my units in a more cause and effect kind of way. I don't need to use a random activity base like direct labor. I can find something that's a bit more descriptive and useful. Like if I have a lot of MOH that comes from quality control, I can just keep track of how many inspections I do on each product line. And then I can divide that cost by how many quality inspections. And then I can go in and say, well, I also have an awful lot of MOH that comes from ordering raw materials. Some of my product lines, I have to do more orders than others. Why don't I keep track of the number of orders that I do for each product line, and instead of dividing up that MOH with random direct labor hours, I start to divide it up based on how many orders for material I make for this product line versus this product line. And so this is the way in which someone realized that you can make your allocation of manufacturing overhead a little bit more accurate. Now you cannot make your allocation of overhead 100% accurate. And this, if he ever asks you about what are some of the downfalls of ABC, because this is always a question on the exam where he likes to ask you a theoretical question, so putting some effort into understanding ABC theoretically will pay off for you. ABC is not a perfect system. You still have some random allocations. There are still some costs when you pull apart all of your MOH that you are not going to find any activity that gives you a better driver or a better way to divide that MOH. For those things, you're still just going to use a random activity base. Those are usually your facility level costs, okay? So that's one of the downfalls of ABC. So the process itself for doing ABC, I feel bad, so you know what, I'll leave it and then I'll turn it around because there's like half the room still not here. And then it's like fresh. Except for this. So applying ABC requires you to take this MOH and instead of one big pool, you have multiple pools. Okay? So all of your MOH, you break it out into different pools, and for each pool, you need to choose a cost driver. Okay? Cost driver is essentially, it's the term that we use for each pool's activity base. Okay? So in the one rate system, you have one overall estimated overhead and you divide it by one activity base. In ABC, you have multiple MOH pools, and each pool has a cost driver. That's like a language thing. He's never going to call your activity base a driver, and he's never going to call your driver's activity bases. So that's something to note, okay? So your first step that you would do is you identify your cost pools. And their corresponding drivers. many of the exams, he even tells you which one matches with which. In some exams, he separates them, right? But it's going to be so obvious which belongs with which, okay? Now, for each of these pools, you calculate a rate. And the calculation is the total MOH in that pool divided by the total use of the cost driver for the entire company. So if they give you two different product lines and they say this product line uses 100 quality inspections and this product line uses 200 quality inspections, then the total number of quality inspections for the entire company is 300. So you have the total MOH divided by 300, that gives you your rate. You will have to calculate a rate for every single pool. So for ABC, you calculate it once. Sorry, for normal, you calculate it once. For ABC, if he gives you 5 pools, you have to find 5 rates. 1 rate for each pool. Go ahead.
These are all
Because he's going to tell you the total amount that they estimate for that pool, and all the pools together will total the grand total estimated.
Normally, given us 2 sets of the previous year and the estimated.
The way, you mean like actual versus estimated kind of thing?
The actual of the previous year versus this upcoming year's estimated. Because what you basically
He won't do that, I don't think.
usually you take the estimated.
You would use the estimated for the coming year, yes. But like anything that has to do with over or under applied or last year's actual versus applied or whatever, I've never seen him test over or under applied combined with ABC, although technically he could, because you will still have over or under applied overhead. But he's never done it. If he tests you for over or under applied overhead, it's going to be in chapter 3. And then this, he usually doesn't hit you up with that stuff, but yes, it would be the estimate for the year. So now that you have a rate for each and every single pool, you apply the MOH 1 pool at a time. And you add them all together to get the total MOH applied. So this is a situation where we have you have pool number 1, like quality control. You'd have your rate of like $10 per inspection. That line uses 2 inspections, $20. You have pool number 2 for whatever it is, and that rate is $2, and they use 3 of them, that equals 6. And you have another pool, that's 1, and they use 10 of them, that equals 10. I'm applying my MOH piece by piece. With 1 rate, I do 1 rate, and then I apply it in 1 shot. It's very easy. With ABC, I have to apply the overhead bit by bit, and then to get the total overhead, I have to add it all up together. Total MOH applied. Okay? And that's it. Go for it.
Is ABC always going to be, like, as we pass this question, which way is better? Is ABC always going to be the way out?
ABC is not always better. So ABC, here's the thing. To answer your question, I'm going to tell you the ways in which ABC is good and the ways in which ABC is not good. So one of the benefits of ABC is that for some companies, it can increase accuracy, and it does that by breaking the overhead up into multiple cost pools and using individual drivers to allocate the overhead a piece at a time. this is particularly useful for companies that produce multiple product lines where the products are very different one from the other and consume vastly different levels of resources. So if I have a company, and he does this in examples all the time, where he has one company where they make like the bargain lawnmower that's like one of those push guys that's just like the blades where you're sure you're gonna like kill yourself with it, and then another one where you like ride it, you know what I mean? Like, those are two very different products, right? This guy costs $50 and this guy costs $500. Those are two very different product lines. ABC will be really good for something like that. We call this a high volume product and this a low volume product, right? So if you have a company with high volume and low volume products in the same company, ABC is good for them. But if I only make one thing, like I only make that one push lawnmower, then ABC is going to do nothing for me. I have one product where everything is the same. It's all, each unit is going to get an equal amount of overhead. It doesn't matter, right? So ABC will not do much for that company. And the reason why for that company, even if ABC helped them a little bit, maybe they wouldn't choose ABC, is because here's the downfalls of ABC. It is extremely complex to use. It takes a lot of time and expertise to apply it. You have to keep track of like 1 million cost drivers. Before you were just keeping track of your direct labor, which to be honest, you were keeping track of anyway. Now I have to keep track of all this other stuff. So it's really complex to apply, and it involves like a lot of work, which is very expensive, right? Because you're paying an expensive accountant to do it. So because of its complexity and the increased cost, a company should only use ABC if its benefits outweigh its extra cost. And you'll see in some of his questions, like we're going to do one tomorrow where you can see he's kind of trying to point you in that direction. Where there's a company and they're making kayaks, and in the question it says, oh, you know, the manager, she's thinking of adopting ABC, but she's very cost conscious, so she doesn't want to do it unless she feels like it's worth it. And in that answer, whether you choose to advocate for ABC or not, you would have to say she should only apply it if she believes that the increased accuracy is worth the increased cost. So your answer, you can advocate either way as long as your arguments are solid. Okay? So, the theory, like that last theory question that he always asks is usually always this. Which one is better, ABC or normal? You know, he gets you to cost the unit under normal, he gets you to recost it under ABC, and then he says which method is better. If you answer that question, ABC because it is more accurate, you will get exactly 0 for that answer. Because essentially, you're saying it is because it is. It's better, it's more accurate because it's more accurate, right? It's not, he wants to know why is it more accurate, okay? So I'm going to tell you pretty much exactly what you need to say. You need to say, if you're going to advocate for ABC, okay, you need to say that ABC, actually, you know what? I was writing this. I'm actually going to read it because sometimes Pardon me? Yeah, normal costing, you already know my spiel, hey? You remember this from last time. Okay, so in normal costing, we use a only one pool for manufacturing overhead, and the allocation assumes that all of that overhead is unit-based.
Can you repeat slower, please?
I am going to repeat the whole thing like twice. So I'm just going to keep going, and I'm going to talk slowly, and then I'm going to repeat it one more time, okay? So in normal costing, we have one pool for manufacturing overhead, and the allocation for that overhead is all unit-based. Okay? ABC, by dividing overhead into multiple cost pools, each of which has its own cost driver, recognizes that not all overhead activities are unit-based. Some are, and here's where you're going to list this. Some are unit-based, some are batch-based, some are product-based, and some are facility level. I guess you could call these either base or levels. Either way, base, levels, whatever. Potato, potato, no, potato. Okay. So, in using multiple pools with multiple drivers, allocating overhead a piece at a time, we can, ABC increases accuracy, and then he loves this, throw in, which leads to better decision making. Okay? And then if in the question he's giving you some indication about like cost concerns, add a sentence at the end that says, but the company should only consider using ABC if they believe the benefit, the benefits justify the extra cost of ABC. Okay? If in the question there's some indication of like concern about the cost of ABC. I mean, you can throw it in no matter what, like, do you know what I mean? It's always true, but sometimes you can tell that he's fishing for you to say something about how ABC is more expensive. Okay? So, just to talk about these things, okay, to explain what I just told you, when I use the one rate system, right, I'm usually doing MOH over something like direct labor hours, right? My activity base usually under normal costing is like something that's unit-based, like direct labor hours, direct labor costs, machine hours, direct material, right? So I'm essentially taking all my costs and I'm allocating them as if all of those costs are incurred for every single unit that I produce. But that's not necessarily true. ABC recognizes that some costs, yes, happen for every single unit, but some costs only happen for each batch, like for every grouping of units. Some happen for only the product as a whole, like it only happens to support the whole product line, like design or engineering or testing of that product, like the initial testing of the product. Some things happen at facility level, like rent, insurance, depreciation, okay? Busting things out into those multiple levels and giving a cost driver that allocates things on different levels, that's what increases your accuracy, okay? So I'm going to say this one last time a little bit faster. It's probably going to be a little bit different because I'm thinking on my feet here, but in normal costing, we use one MOH pool. We group all MOH together and we allocate it all using a one unit based activity base. ABC breaks MOH into multiple cost pools and uses drivers that recognize that not all MOH activities are unit based. Some are also batch level, product level, facility level. By applying MOH one pool at a time, using cost drivers, you can increase accuracy, which leads to better decision making, but a company should only use ABC if the benefits justify the extra cost. Does that make sense for everybody? Does anybody have any questions about ABC? Because we're moving on to chapter 6. Yeah.
Either like journal entries or the key tables,
yeah.
And then the third one where he just gives us all the information. For this chapter, is it kind of the same pattern in each midterm?
What do you mean, like
the same type of exercise, or does he mix it up with the way he
for ABC?
Yeah.
There's a couple of things that he's done over and over with ABC. He either gives you a company that has two products, a high volume and low volume one. You cost it under normal, you recost it under ABC. You see that, like when you cost a company that has a high volume and low volume unit product under normal, the low volume, i.e. the cheaper, the one where you make less units, the one that's a more expensive thing, it will get this much overhead, and the high volume one, i.e. the cheap unit, will get this much overhead. And then when you recost it under ABC, it'll be like this. That always happens. It'll just make the difference between the two amounts of overhead that you allocate to them larger. And then he asks you which one is better. The other option is that he'll give you a company with a singular product, and he'll say that they get a special order for that product at a decreased price. Do they accept the order? And you cost it under normal costing, and you'll probably under normal costing reject the offer, and then you recost it under ABC, and you could accept the offer under ABC when you do that. So the question there is not like which one is better. The question that he's asking you there is, do you accept the offer or not? Those are kind of the two that I've seen, but you know what, like, I never like to say that's the only thing he could possibly do. The first couple semesters that I said that, like, I used to tell people, oh, he never tested this, and then he tested it, and I felt awful because I had told people not to study it. So I never say that. I'm just like, go in ready for everything. Just learn. Go for it.
Yeah, I was just
oh no, sorry, it doesn't matter.
So in this case, you can always advocate for ABC, right?
You could, unless, well, I'm not a mind, like my eye hasn't fully reached its potential of seeing the future, but I feel like there are circumstances in which he could come up with a situation where maybe you shouldn't advocate for ABC. Like, maybe you could make a case and say, you know what, when I costed it under normal and then I recosted it under ABC, the difference was a penny. And they mentioned somewhere in the question that they were really cost conscious, and so you decide not to use it, you know? So there could be a situation in maybe which you could advocate for not, but it's also one of these things where, to be honest, as long as your reasons make sense, you can argue that for points in his office, no problem. Do you know what I mean? I feel like as long as your reasoning is there, which one you advocate for is not the point. Honestly, most of the time, yes, you'll be advocating for ABC, but I don't want you to tell you to just blindly advocate for ABC no matter what. So now I'm going to hit over there. Sorry.
I just wanted to know, can you explain the classification of activity levels?
What do you mean, the unit facility, whatever?
Yeah.
Unit level is something that needs to happen for every single unit. It's something that happens, every single unit, it happens to that unit. Batch level is something that only happens per grouping of units. Like, for example, quality control. I usually, in a, like, let's say I'm making a batch of Coke cans, right? I'm not going to test every single Coke can to make sure that it's okay. I'm only going to test, like, a sample. Like, open a couple of them up and make sure that it's not going to poison people. I don't know what quality control they do for Coca-Cola, but do you get what I'm saying? They don't test every one. That's something that only happens for every batch. Product level is something that only happens for the entire product line. So that's something like engineering of the product. Like originally testing it. So like we spend a lot of money on like developing products, R&D, that kind of stuff. That's a cost that needs to trickle down into the units through overhead. Facility level is stuff that supports your entire factory. So that's like rent, utilities, insurance. That's for your whole space. Does that make sense? And don't ask me about the value, non-value added. Honestly, memorize. Memorize, memorize, memorize. Okay? All right, chapter 6. Oh, and as long as there's no one coming into this room directly afterwards, I promised someone during the break that after I finish chapter 6, I would take a moment and I would write out the templates for chapter 4 under FIFO and weighted average. So at the end of this, I'm going to, like after chapter 6, you all can go home, but I'm going to stay here and write out the templates if you want to. If you don't have a good template, I will write them out, okay? Now, chapter 6 is, finally we get into something different. This is not costing a unit. Now we're doing, it's an analysis tool. So CVP is cost volume profit analysis, okay? So this chapter, if you read it in the book, it seems like a million formulas. Actually, it's kind of one formula, like there's 5 applications, 3 of which is essentially all the same formula, just with tweaks. Okay, so it's not as intimidating as I think the book sometimes makes it seem. Okay, the main thing that the core of this to understand, it's all about contribution margin. Okay, so what is contribution margin? Now everybody knows the income statement, I hope. So the income statement that we learn in financial accounting and the income statement that we use to report our results is sales minus cost of goods sold gives us gross profit minus our period expenses gives us our net income. This income statement, remember like 2 hours ago when we talked about how we divide costs? And I said, you know, the first one is an accounting way of dividing costs. The difference between product costs and period expenses. Product costs, period expenses. And then I said, there's another way to think of dividing costs, and that's how they behave. Whether they behave in a variable manner or a fixed manner. So I can reimagine this income statement, but instead of dividing all of my costs based on what I spend the money on, instead I'm going to divide my costs based on how they behave. Sales minus my variable costs gives me contribution margin. So I'm going to abbreviate this as BC from now on. I'm going to abbreviate this as CM. It's so much easier. Minus my fixed costs. I'll abbreviate this as C. Gives me my net income. These systems, essentially, my sales, these are equivalent. And my net income, these will also be the same. It's essentially this, I'm doing the same thing. All of the revenue I took in from my clients minus everything that I spent to make that money gives me my net income. The sales that I take in from my clients minus everything that I spent gives me my net income. Whether like this or like this, it should start and end at the same place, okay? The only thing is that in this one, I took all of my costs and I divided them as to whether or not they related to the product or they were a period expense. Here, I took all of my costs and I divided them as to whether or not they acted in a variable manner or a fixed manner. So when I say variable cost, I mean all. Period and product. Same thing here, fixed cost, product, and period. He very often tries to trick you into only including the product costs and excluding the selling and admin expenses. You have to remember, you're grouping all the variable costs together and all the fixed costs together, okay? So this is the core of this chapter, thinking of the income statement like this. If he gives you an income statement for your chapter 6 question where it's like this, you're going to have to figure out how to get it to look like this. He's going to tell you something to divide your costs here, to separate this into the variable and fixed portion, and to divide this into the variable and fixed portion, and then transform it into that. Last semester, he gave you something to be able to use the high-low method. There's other exams where he just tells you the percentages, but he will give you something that will allow you to break it apart, okay, if he gives you this. So let's talk about contribution margin and what it really is. So contribution margin is the amount of money that you get from your sales that are available to pay down your fixed costs. And once your fixed costs are paid off, contribution is the amount from every single unit that contributes towards your net income. That's the textbook definition. Let's break it down even further. Every product that I sell, I get money from my client. I sell a unit, I sell it for $10. That's my price. I have a variable cost of making that one unit, right? That's the nature of variable costs, right? They're always the same for every single unit. Fixed costs, they might change per unit depending on how many units I make. But my variable costs, I can say with certainty that every single unit I sell, I know exactly what that unit's variable costs are going to be because it always stays the same per unit. So when I sell this unit, I know that my variable cost of producing it is $3. Which means my contribution margin per unit is $7. So if I always know that every single unit will sell for $10, and I know that every single unit will absolutely cost me $3 in variable costs, then I know, I can just as easily say, I know that every single unit gives me $7 of contribution margin, and that is always going to be true for every unit that I sell. Okay? So if I know the contribution margin, I don't even need to know the price or the variable cost sometimes. I can just work with contribution margin. That's the beauty of it. Okay? Now, to sell that unit, I didn't only have variable costs. I also have this big, massive pile of fixed costs, right? To run my company, I'm going to give us, obviously, like a really easy number. I have $14,000 of fixed costs. That's my big chunk of money. And it's the same no matter how many units I produce. If I produce no units, I got to pay $14,000. If I produce 10,000 units, my fixed costs are $14,000. It does not change. Okay? For every single unit that I sell, I take in this money from my client, it pays off, it's like paying for itself, its own incremental cost, and what's left over is $7. I'm going to take that $7 and I'm going to start paying off my fixed cost. $13,993. I'm on my way, right? Every single unit that I sell, I am taking I sell another unit, I'm slowly chipping away at my fixed cost. Until I chip away at that fixed cost completely, my company has a negative net income, right? Total sales, $7. $10. Total VC. Guys, I'm terrible. It's hard to be up here for this long. Contribution margin, $7. Fixed cost, $14,000. Net income, negative $13,993. So I am very concerned about how many units it's going to take me to pay off those fixed costs. Because as soon as I sell enough units that I get to 0 fixed costs, right? As soon as I sell enough that my contribution margin is $14,000, whatever this number is, I'm going to hit a point where my net income is 0. And you might ask, why am I so excited about making no money? The reason is that this is the turning point in my company. Because the very next unit that I sell, I've taken $10 from my client, 3 of those dollars goes towards paying the variable cost of having produced that unit, and I have $7 left over to contribute to fixed costs. Oh, guess what? I have no more fixed costs left. My net income will be $7. Every unit after what we call our break-even point, the point where my net income is 0, I am making positive net income. I'm starting to actually have money to put into my pocket. So your break-even point is an important point in your company. It's a measure of risk, right? It tells you how risky your endeavor is. Because if I tell you, I have this great idea for a product, break even, I have to sell 1 million units, but then after that, I'm making really good money. Or if and then another guy comes along and pitches to you and he says, listen, I have a great product idea. I break even at 1,000 units, and after that, it's all gravy. Who would you invest in, right? The person where they have to sell 1 million units just to make $0, or the person where they're starting to make real cash after only selling 1,000. So a break-even point, you want it to be low. A lower break-even point is less risky than a higher break-even point, right? And that's the first application of CVP. It is break-even point, okay? The formula for this basic formula is really simple. Break-even point in units is equal to my fixed costs divided by my contribution margin per unit. Because really what I'm saying is, if every single unit gives me $7 to contribute towards these fixed costs, how many times do I have to gather $7 to pay off this 14 grand, right? If every single unit is like, 14 grand minus 7, this minus 7, this minus 7, this minus 7, how many times do I have to do that to hit 0? Which is essentially like saying, how many times does 7 go into 14,000? And I really hope that the answer is 2,000. Okay? So if I sell 2,000 units, if I collect $7 of contribution margin 2,000 times, I will make exactly enough money that my net income will be 0. That's the most basic application, break-even point unit. He might also ask you for the break-even point in dollars. Now you will be tempted to just do your break-even point in units and multiply it by the price, but don't do that. You have to use the formula, okay? And the formula is almost the same, except now it's fixed cost over what we call the contribution margin ratio. What is this? Contribution margin ratio is just turning my contribution margin into a percentage. If I say out of every unit that I sell, $7 goes towards paying off my fixed cost, what is that as a percentage of sales? What percent of my revenue becomes contribution margin? I have a hard time sometimes remembering all these formulas, and I'm very visual, so I just remember it like this. I think of an X like this. I take my price and I put it down. I take my contribution margin and I put it up. 70%. I always come up with stupid tricks like this, like credits and debits. I do this all the time. Like literally every day. It's been 2.5 years that I've been doing accounting now, and I literally still do this every time I say the word credit or debit in my brain. Okay? So it's very simply, it's just contribution margin over price. And since this is a ratio, I can calculate this either using per unit, or I can do this using totals. Like if I have a total revenue and a total contribution margin, I will get the same ratio. So 14,000 divided by 0.7. 7.7. Okay? This is the most basic. The second app, go for it.
You get the same result as if, like if you were to multiply the break-even units and the question is, can you fill it or not?
multiplied the break-even point by units times the price and you didn't get the break-even point in dollars, I would say there was something wrong. You know what I mean? So, but he doesn't want to see that. You know what I mean? Every time he asks you for something like this, use the formula. So, next application. Now, what if it's all well and good to aim for 0, but what if I want to know how much sales or how many units I have to sell to hit a positive number? Because, you know, no one goes into business to make $0, right? People have a target amount of income that they want to make. I want to make $50,000. How much sales do I need up here for at the end for me to have $50,000 in my pocket? Okay? This is exceedingly simple, and it's just a modification of break-even point. Because before we were saying, how many units do I have to sell to pay off this $14,000 in order to have nothing left over? All I want to do is $14,000. I don't need anything else. Now we're saying, how many units do I have to sell to get this $14,000 and then another 50 grand? So if he asks you for a target income, so how many units do I have to sell to hit a target income of 50,000? The modification is just, this is so close to the edge, I don't know why I did this so far over. Fixed cost plus whatever target income he has asked you for. Okay? Target income. Same thing here, plus target income. You're just, by having a positive number here, you're essentially just increasing the amount of money that you need to collect. How many more units do I need to sell to get my 14,000 plus another 50 grand? That's it. Target income. Units, dollars, same thing. It's exactly the same. The only thing that changes with the formula is that I add the target income to the numerator.
Because of the units sold to hit this target income.
This is how many units do I need to sell to hit this target income. This is how much dollars of revenue do I need to have to get this. This is my next point, okay? So, the only, and I'm sorry that I'm going faster, but I really want to try and get you guys out of here at 6, because I'm hoping that you're going to join me again tomorrow morning at 10, which, by the way, I didn't even notice this, but because I never check the room until I'm like on the metro on the way here. But we're in like the big auditorium tomorrow, in the MV building. Like we're in the big room on ground floor, the BMO one, like the big one. And I'm really excited because I've never taught in that big room before, and I'm really stoked. So it's like, if you're a nerd like me, you're like, woo, big D, you know, like you're very excited. Anyway. Oh, all of my charm is lost on you. Okay. So this would be my 14,000 of fixed cost plus my 50,000 of target income divided by my $7. That would give me my number of units. Okay? So I think I saw a hand go up. Was there a hand that went up?
I wanted to ask you, does it show that their tutorial ends at 5:30 today, or just extending it?
If you want to go, go. But I'm not
No, just asking.
Oh yeah, I mean, I don't really think anyone's like, except these boxes have me a bit worried, but like, besides that, I don't think anyone's coming into like this room. So I'm just gonna keep going until you know all the stuff you need to know, and then we can all go home. I stopped getting paid at 5:30, I guess, but who cares? So the only thing that might complicate this is if he says anything about tax. Remember that after you have your net income, the government is going to take a portion in tax, right? And that's going to be based on some kind of percentage, let's say 10%, right? So they want 10% of that 50,000, means they're going to take $5,000, leaving you with 45,000. That's how the world works. Now, he might ask the question, how many units do I have to sell in order to hit a target income of $45,000 after tax? This is my net income after tax. This is my net income before tax. Before the tax is taken away, after the tax is taken away, right? All you need to do is, if he asks you for the after-tax number, is you need to reverse the tax back up to this before-tax number, okay? This formula only works if this target income is the net income before tax. Okay? So really simply, how do I reverse tax? If they tell you that the tax rate is 10%, then that means that whatever the amount is that I took away, if I take away 10% here, this number, how much is left, percentage-wise? 90%, right? So if I want to reverse that, I could rethink of this as 50,000 instead of minus 5,000 equals 45,000. Because remember that in your exam, you're not going to know this number. You're only going to know the percentage. 50,000 times 0.9, which is 1 minus the tax rate, will give you 45,000. So to go backwards, if I only know this number, I just need to reverse this equation. 45,000 divided by 0.9 gives me 50 grand. So that's all you need to do to reverse the tax. You just do the net income after tax divided by 1 minus the tax rate. Okay? Next application. You gotta hit it and quit it. This is all assuming that I only sell one thing, right? So far, we've all been assuming I have one contribution margin because I have one product. But what if I have a company that has multiple products? This is what we call a sales mix. It might ask you to do either a break-even point or a target income, but instead of giving you only one product, he'll give you a company with multiple product lines. In this case, you need to calculate something called the weighted average contribution margin. I call it the WACM. Okay? You can only calculate just as far as I know, he's only ever really done the WACM per unit. I haven't really seen him do the WACM ratio. Okay? I'm not even sure if it's possible. So all you're doing here is looking for a weighted average contribution margin. So if you have product line A and you have product line B, they're going to give you a price and a VC for each of them to calculate a CM. So you have two different CMs. How do you combine them? You can't take a pure average, you have to take a weighted average. And the weights, i.e. the relative importance, is always how many you sell of each product line in units. not in dollars, in units, okay? So the sales in units for A is, let's say, 100, and the sales in B is 200. The weights is just how much percentage is this out of the total sales. So my total sales are equal to 300. So A, I sell 100 out of 300. So 1/3 is my weight. And for B, my weight is 200 out of 300, so 2/3. So the WACM formula is very simply the sum of the weights multiplied by each individual CM. So in this case, it's 1/3 multiplied by 8 plus 2/3 multiplied by 4. Whatever this number is, you can use it in a break-even point in units, or a target income in units, or a target income after taxes in units, the same way that you use your contribution margin per unit. The big thing to remember is that whatever number of units you get from that break-even point, that's the total number of units, both A and B together. So in the question, he's going to ask you how many of A and how many of B. So once you have that total break-even point, you then need to use your weights to divide that number. Let's say the break-even point is 10,000 units. Of that total 10,000 units, you know that 1/3 of them are going to be A's, 2/3 of them are going to be B's. Simple? Last two applications. Margin of safety is pretty simple. So margin of safety, okay? The margin of safety is just the difference between your sales and your break-even point, okay? It's by how much your sales can drop before you start having a negative net income. Because remember, your break-even point is where your net income is 0. If your sales drop below your break-even point, you're making negative net income. You're operating in the red. So that space between where your sales are and where your break-even point is, we call it a margin of safety. It's like a cushion, okay? And it's also a measure of risk. If my cushion is small, then my company is pretty risky. If my cushion is big, I'm a bit more stable. I'm a safer bet, okay? So the very simple formula is sales minus break-even point, and this is always in dollars, so sales in dollars minus break-even point in dollars gives me my margin of safety in dollars. Margin of safety in dollars is not super useful if we're trying to compare two companies and the two companies are very different in size, right? Imagine one company, they have $100,000 in sales, a $60,000 break-even point. That means that they have a $40,000 margin of safety. And I say, oh, well, this other company has a $100,000 margin of safety. That company must be way less risky. But maybe that company has $1 billion in sales, right? So if this company is making $100,000 and $40,000 of it is margin of safety, that means they have a 40% margin of safety out of their total sales. Whereas this company, $100,000 out of $1 billion, I don't even know what that is. That's like, what, below a percent? I don't even know. It's like a decimal. Right? So comparing the numbers was useless for me. What I want is a percentage, and that percentage is the same way as we got our contribution margin ratio. Do your big X. Take the sales into your denominator and take your margin of safety into your numerator, and this is going to express your margin of safety as a percentage. So I can either say my sales can drop by $40,000 before I run a deficit, or I can say my sales can drop by 40%. Okay? Last application. Notice how I'm rolling. P.S. guys, if you find this explanation of CVP too fast, go to the JMAC video from last semester. Okay, it's on YouTube. If you find this chapter very challenging, I did a longer explanation the last time because I had more time. Okay, so you can just go on YouTube and look at that video. I doubt that they're gonna take it, even though this one is like a repeat. Hopefully they'll leave both up. You guys will leave both up?
Sorry?
You guys will leave both videos
Oh,
up?
yeah.
Amazing. Operating leverage. Operating leverage is kind of a weirdo of the group. He's a little bit weird in comparison to the others, okay? Operating leverage is also the one that he'll sometimes ask you to explain in words. So the big thing to remember about operating leverage is that it is a measure of earnings volatility. What does that mean? Sales minus BC gives me CM minus FC gives me NI. If my sales change, if something happens to them, they go up or they go down by a certain percentage, what will be the resulting change for my net income? This is what operating leverage tells you. It tells you, you just need to know what's the percentage change in sales, and you can, with operating leverage, know right away how that's going to affect your net income. High volatility means that a small change in sales results in a big change in net income. And low volatility, i.e. a low operating leverage, means that a change in sales results in a smaller level of change in the net income, right? It basically is like which one turns up the volume more, right? It's like amplification. A low operating leverage, because an amplifier, I speak into a microphone, and if my amplifier is low, my voice gets louder, but just a little bit louder. That's a low operating leverage, low earnings volatility. But if I turn that amplifier all the way up, and I speak into the microphone, my voice is going to become huge. That's a high operating leverage, okay? That's high earnings volatility. And the key thing that he wants you, if he asks you a think about it question on this, he always wants you in your answer not only to mention that it's earnings volatility, but he always says the sword cuts both ways. And what that means is that, yes, if I have a high operating leverage and my sales increase, then my net income is going to increase a lot. And that looks great. But by the same means, for that exact same company, if their sales drop a little bit, their net income is going to plummet. So a high or low operating leverage is neither good nor bad, right? It just tells you how much things are going to fluctuate. One is more risky than the other, right? High operating leverage is more risky than low operating leverage, but one is not intrinsically better than the other. the degree of operating leverage. So when I say degree of operating leverage is not a unit, it's not a dollar, it's not a percentage. It is a degree, it's a multiplier, okay? It tells you by how much this change is multiplied to get this change. So if I have an increase in sales of 10% and my operating leverage is a 2, then 10%, 0.1, multiplied by 2 will give me my percentage change in net income. That's what I do, I just multiply. The percentage change here, multiplied by the operating leverage, gives me the percentage change here. Right? So your operating leverage is usually going to be a number that's under 10. An operating leverage of 10 would be insane. If I have a 10% increase in sales, my change in net income would be 10 times that amount. Right? So an operating leverage of 10 is like astronomical. Okay? And that, my friends, is all of the theory. I'll see you I'm gonna write out until someone